Good morning. Check the chat. Good morning, Tony. As always, you're always the first one. But yeah, so today's probably going to be somewhat of a quick call. Uh, we kind of do the same thing over and over and over and over again. Uh, it's good to see that price plays out, doing pretty much what we wanted to do. For the most part, it's done exactly what we assumed it was going to do, based on the way price delivered recently, and we'll get into that in a little bit. But yeah, so the coming week, first of all, it's the start of the new month, so we want to take a look at seasonality. I could pull that up real quick. We'll be able to look at that. I could find it. Let's get it up to May. Oh, a little too far. All right, so ICT has a little slogan he likes to say when May comes around. He says, sell in May, go away. We need to observe and see if that's going to be the case. Currently, at the moment, it doesn't seem like that's going to be much of an interest for price to want to go lower. Obviously, that could change. We still got a lot of variables. Deals still need to be made in the U.S. economy. Many different things taking place. So we'll see. But going into May, if you look at seasonality here, if we were going higher going into May, May would be the time when we would really, really start to anticipate a... here, let me fix this real quick. May would be a time where we would very much consider downside coming into the market, or like an interest for that to take place. There's a significant low, like a seasonal low that forms in May that leads to a run higher, where all three of them agree, right? So the what is this? The 28-year, 15-year, and 5-year. So that's a heavy bullish seasonal tendency as we go out of May. But to start May, there's somewhat of a decline that takes place. So with that being the case, if we are going to continue being bullish, I do believe that it's not unreasonable for us to see the start of this month end up, trying to decline a little bit, to then set some type of low and then look to kick into the bullishness. We've been so aggressively bearish since January. So we've already done a lot of sell side delivery. I mean, it could end up going lower if it wants to, right? We'll have to see. Right now, there's nothing in the market promoting that idea. So we're gonna continue to push for buys as we were pretty much the last couple weeks, last 2 weeks, since Trump talked about taking the tariffs or pausing the tariffs, which led to the market displacing higher. And then from there, we were anticipating how price was going to either attack certain highs and fair value gaps and premium arrays, or if it was going to hit one of those and then just start completely tanking continuously. It did not end up doing that. So again, we're going to take this into consideration. Seasonality is not a be-all end-all, but it is a place that you want to start at the beginning of a month and be aware of it throughout the year, because it's like a treasure map. ICT calls it a treasure map, and for good reason, because if you go back and study the last 10 years, by going to this, do a little analysis, try to see where all three lines are moving the same way, identify the lows that led to rallies, the highs that led to declines, note the time of year that's in, and then take that information and go to the last 10 years of data in the asset that you trade. You'll see a very crystal clear view that this is in fact what happens, right? This is absolutely consistent. It's not going to be perfect. Like, for example, if we're in a bullish market, which currently right now it seems like the market's rebounding to go higher, if that's going to be the case, any type of potential sentiment that looks like it wants to go lower, uh, basically being all three of these lines going lower, those are going to be times in the year where we could potentially see retracements if bullishness is going to continue. Okay, and then vice versa, right? For shorts, right? If we're in a bearish market and there's buy side seasonality looking like it wants to be in play, but the overall market sentiment, which this is very important, but the overall market sentiment is bearish, any type of bullishness like this, for example, would potentially be a time in price where there's retracements. So, you got to be able to use this effectively. It takes time to get used to how it operates, because clearly these are long-term views. These are large trends. These are large time windows, 28 years, 15 years, and 5 years. So it may take some time for these things to kick in line, but the overall sentiment on the higher time frame should agree with this in some capacity, even if it's bearish overall, but there's a strong bullish seasonal tendency. Again, you want to note that time of year and then classify that as a potential time in the year where there could be a retracement. If in this example things were bearish, we're bullish currently until things change for the indices. So any type of downside like we see here could result in a bearish retracement simply to set up further buys. Okay, so that is setting the stage, at least for what we're going to talk about today, and just the overall analysis, and just for the rest of the month, right? This isn't something similar to COT, right? They aren't things that you have to use every single minute of every day. It's not always going to be significant at a particular time, and that's totally fine. You don't take COT or seasonality as a tool where if you don't see them in alignment, you can't take a trade, right? They're not be-all end-alls. They're just supporting evidence for a particular narrative and drawing liquidity on the higher time frame that you're looking to identify. Okay, but yeah, I hope this makes sense. I talked about this before, but I hope it's pretty self-explanatory given what I've just mentioned, and then also how you go and study it so you could sharpen this skill, which is very worth your time. Okay, so again, sell in May, go away, generally is what ICT says for May, but we're bullish. So what does that mean? It means that any type of down delivery, unless something significantly changes using our invalidation process, we're going to continue to see any turns to the downside acting as potential retracements to go higher. Again, that's assuming things don't change. If things change, which we talk about all the time, like what those are in terms of the validation and validation process, then obviously we'll have to adjust and then work with things at that time. But yeah, so seasonality is there. Let's actually go look at. Let's look at this. See if we can pull May up in the DXY too. Okay, so something similar. Not really. So this DXY has an interest to go higher going into May, and you saw that the NASDAQ has an interest to go lower, right? Again, what is the current sentiment in the marketplace, right? Things look like they're rebounding in the indices, but it looks like we're tanking in the DXY, right? So we're going to have to see what's going to transpire there or through the rest of the month. And then obviously see what happens this month and or this week, and then kind of gauge as we go along. But there's an interest for this to want to go higher. All three lines, there's a significant low that forms. Maybe that turns into something significant. Maybe it doesn't. We need something to change on the DXY in order to adjust because we've been going to the downside. The indices are the ones that have changed and started running to the buy side, right? So again, this is not a be-all end-all. But there is this interest that we see here. So if the DXY was to start rampaging to the buy side, breaking certain liquidity pools and PD arrays and justifying a reversal from bearish to bullish, then obviously seasonality will be kicking in effect at that moment. Currently right now, it's not happening. There was a retracement, which we're going to talk about in the DXY, but that's pretty much running to where I wanted to see it go to for us to continue going lower, right? So we're going to need further evidence. But if it goes higher, again, we have this to justify. If not, right, if DXY does continue to tank, it's going to be a good example of the seasonality showing us one thing, and maybe it just leads to a retracement, so it can continue in this case to be bearish. Okay, but using the times of the year when price is bullish in a bearish market to identify points in time throughout the year that may end up leading to a retracement within the higher time frame narrative. All right, so I hope that makes sense. Hope it's self-explanatory. But yeah, so Sunday today, obviously there's no news. We don't ever trade Sundays anyway. We have Monday that has PMI. That may be pretty exciting. We'll see what happens. But we do have federal fund rate and some FOMC conversations going on. So we're going to want to be very cautious to start the week. Obviously, we go in with no fear. We're not going to blow our account. We understand risk management. We don't overtrade and over leverage. So what is there to be scared of? Taking a loss? We all take losses. Last week I took a loss with my private community. Was I concerned? Am I concerned? Absolutely not. Does that change anything? Absolutely not. Right? The market's still going to deliver the way that we know how it's going to deliver. And, nothing changes. We just on to the next. It's another day on the job. Right? So, again, we're going to possibly see something tomorrow because PMI is generally exciting. There's no news at 5:30, no news at 6:30, but there is news at 7. So what does that mean when things are like this? We don't take a trade before this news event, or at least at a minimum, we don't take a trade before 6:30, okay, which is the normal New York Open. 5:30, an hour before the New York Open, that's the bond market open. But that's, significant, and that's when ICT tells us that we should be looking at the chart, making decisions, not to take an entry, but to identify what could potentially be taking place or what could transpire, what liquidity is available, so on and so forth. Okay, so most likely my engagements would wait till this time, maybe a little bit beyond, going into the silver bullet. Maybe there's something that takes place at the 650 macro ahead of the news. I don't really want to get in front of this news event, but again, we'll see. And then, of course, no news on Tuesday. Expect low probability, possible consolidation. When there's no news, that's generally the default. And, of course, we'll see fireworks on Wednesday. Thursday is my favorite news event, unemployment claims. So volatility injection should be taking place there. And then, of course, FOMC on Friday, whoever the hell this guy is. Right? So, yeah, we shall see. But that's kind of the landscape and idea for the news. So, yeah, with that being said, let's go to the let's go to the yields first. All right, so let's actually start fresh. Okay, so first thing we want to identify, we got a monthly high here, monthly low, current candle, okay? Previous monthly high and previous monthly low, that range, if you could kind of segregate that range or be able to identify that, this is the range that is important to us, okay, for opportunities for the rest of the month until it breaks out of this high or that low. Otherwise, it's going to have to break one of these, this high or this low, before it wants to either go extremely higher and maybe attack further to the buy side or attack further to the sell side, like this low or this gap down here. So far, it seems like it's still, it's kind of in a range. We do have this wick here, so we're going to also keep that in mind. Okay, but this is kind of like the process that you want to do at the beginning of a month, beginning of a new week. Identify the previous week high and low, identify the monthly high and low that we're trading within, and the things that are in close proximity. right? So we have somewhat of a gap in here. We do have a volume imbalance in here that may end up being a dynamic support level. Let me just see. It's a monthly volume imbalance. Monthly volume imbalance. So why am I highlighting this, right? Why do I highlight anything that's in this area? Because this is the area that we are going to look to find liquidity in. You know, I mean, you could very much, you know, make the argument that, okay, this is my draw on liquidity or this is my draw on liquidity, whichever one, you know, you had an opinion on. But how long do you think it's going to take to get from here to there? Right? Or from here to there? It's going to take a long time. So if that's the only thing you're riding on, I mean, you know, it's going to be a while till you find a setup, right? So identifying the close proximity PD arrays like this volume imbalance. If we get above this candle here, that's going to be a bullish order block. This wick and then the high and the low of the previous month. This is essentially, until this gets broken, these are the only things that I can see in here that are somewhat significant from this time frame. Okay, so let me highlight this too. So it's a very, very simple process. You don't have to overthink this, right? Just because there's a lot of PD arrays to know and there's a lot of concepts to learn and all this stuff, doesn't mean that you're going to apply every one of them at every moment and every time you sit down at the chart. That's where analysis paralysis comes in, because people are looking for so many things at once when half those things, if not 75% of them, are not even available or useful in the chart, you know? And there's certain PD arrays that you're not going to want to use. Is that a problem if you don't use them and you only use a couple certain ones? It's not a problem. It's your model, right? It's what you see. You know, none of us are going to be ICT himself. We're not going to be able to hit like he does because there's so much stuff that he doesn't teach. You know, he has a whole algorithm that he's coded. You know, he has all these he has 81 models. Do you really, if you think about it, want to know 81 models? Right, if you can master it, I mean, great. But we don't have 30 years experience. Maybe 30 years from now, we'll be able to say, okay, we're pretty damn close to him, right? But for the most part, we don't have to be there, right? We don't have to be him exactly to be successful. I mean, what I do, you know, hopefully from the view of you guys that have watched me and how accurate the stuff is, hopefully you see that it is a true statement that you don't need every single thing. Like there's some stuff that I don't use. I don't use propulsion blocks. I don't use, you know, some of the vacuum blocks like Venom model. Like I don't use those things. You know, there's a laundry list of things that I just don't use because I don't need them. You know, if you can answer the 10 categories that I have in my free Discord, you know, the layout that I have for a full trading plan and things you should have answers to basically convince yourself that you know what the hell's going on. If you can answer those are the only things that you really need. You need one model. You need to understand, obviously, the liquidity pools. You'll find that, you know, one of them or two of them are your favorites. Like for me, I like previous month's highs and lows, week's highs and lows, previous days' highs and lows, right? Previous week's highs and lows sometimes take a while to get there. Previous month's highs and lows can also be a little long-term as well. Previous days' highs and lows can be used on a regular basis, on pretty much a daily basis most times. Session highs and lows are also very useful for targeting for the session. You don't even have to target previous day's high or low, or a month's high or a week's high and low. You know, if you didn't want to, I don't think you should like limit yourself like that, because you know sometimes we're close to previous week's highs and lows or previous month's highs and lows, and then at that moment they'll end up being important. Or if you could continue to see price provide evidence that it's going to reach for something like this, like gets above this high, slides through this wick fairly aggressively, just starts rampaging up there. Then, when we get closer, obviously, in that time when it gets closer, if it's like a day or two, possibly, before it takes that out, then again, it could potentially be significant near term. For the most part, we're still inside this monthly range, right? So the liquidity that I just mentioned there, you want to really put in a list, okay? I mean, I've talked about this continuously in terms of liquidity mapping. For the last 3 years, I've talked about it. ICT hasn't really ever mentioned it in great detail. I did hear a space yesterday when he is finally, first time I've ever heard him say it in the last 6 years, he finally mentioned most of these levels that I've been talking about for 3 years. And he even said at the end, as he was talking about it, he said it provides you clarity. It kind of convinced me that that's how I've been able to get this draw and liquidity stuff down so simply, so quickly. I got it fairly quick, right, in terms of how to navigate liquidity. But it was from me studying all his concepts, hearing him mention one liquidity pool, then another one, and I put them in a list. And then I just started really pressing into that. And it's pretty validating, I guess you could say, in terms of my study and how I've progressed, to hear him say the liquidity pools that I've been mentioning in an organized list for the first time. He mentioned it the other day. And then followed by that, he said it brings him clarity. So I've been saying that all the time, that you have to gain clarity. How do you gain clarity? By doing a lot of the things that I talk about, or organizing things in the way that I talk about. And it's just one of those things that when you hear your mentor say something that you've been thinking all along, that you've pieced together, but then he finally comes out and then sprays it at you, and it's like, oh, I was actually correct this whole time. Awesome. You know what I mean? I didn't need his validation, but it's just good to hear it because it kind of just reinforces what I'm helping you guys learn, and it makes me even more confident as far as how important certain things are when he mentions them, because a lot of the things are just tucked away in his videos, and you have to go in and find them, and it's purposeful. He's done that on purpose, which he admitted as well. So it's just good to be able to hear stuff like that, because it just reinforces what we do here and why we're so consistent, why it is so accurate, and why we more often than not can call the draw on liquidity with confidence. It's not just a random thing. And for him to finally come out and make that list, he even added another one that I haven't really used, which is the first hour's high and low, right? So that's on an even more, lower than the sessions high and low, right? He went now to the first hour of New York sessions high and low, going into the silver bullet. I mean, you can also, technically layer like 15-minute highs and lows as well, if you wanted to go even deeper, so again, all of that is rooted from the higher time frame though, right? So if you know where the higher time frame draw is, that 15-minute high is going to be a whole lot more significant when the time comes in like a macro or something like that, right? Versus just randomly going in there and identifying random highs and lows. It's doable, right? Just without a higher time frame narrative, but you're just going to have to be a micro scalper on the seconds chart, like not really trying to hold trades that long at all, or even think about it, because you'll be unaware of what the actual story is. But yeah, I just thought I would mention that because mind you, if you go back and listen to my videos from like 2 years ago and just listen to the live calls, you'll hear me mentioning those liquidity pools for so long, and he never came out in a video and talked about it. To this day, he hasn't done it. He just does one here, one there, one here, one there. He's mentioned previous days' highs and lows, months' highs and lows, weeks' highs and lows. But he's never put them in a list that's very easy to just take and apply. You have to think about it. You have to study for a while to really realize how important it is. And most people don't. So most people don't use these things. They're very simple, very, very simple. Okay? So it wasn't a live. It was actually a Twitter space. He mentioned basically liquidity pools that I have put in a very organized list. I also have it labeled in my free Discord. That's another thing you can go look at. I got a comprehensive list with a couple other ones as well. But it's essentially previous days highs and lows, months highs and lows, weeks highs and lows, session highs and lows. So yeah, very simple, right? It's not overly complicated. To get to that point, there's so much overcomplicating that we do in order to figure out like what liquidity pools are important. Because we don't know what we don't know. But then after you trade for a while, or you watch someone like me or ICT or any of the other ICT traders that know what they're doing, you'll notice a lot of the times their draws on liquidity are rooted in one of those things. You know what I mean? Previous days highs and lows, weeks highs and lows, months highs and lows. And then of course, whatever time frame you're on, in this case, we're doing a weekly analysis, right? The first thing you do is identify the weekly high, weekly low. Because if in order for price to go higher on this monthly chart, say we think it's going to continue going higher for the month, in order for it to break maybe this level up here, maybe this is something you wanted to identify, it's going to have to break through these levels first. It's going to come down to this fair value gap. It's going to have to hit this first. We also have a huge wick down here, so you'd do the same thing here if it was going lower. That also labels out more liquidity pools. But the more simple, easiest to apply, like the least complicated, is what I just mentioned. You know what I mean? Aiming for previous days highs and lows, weeks highs and lows, months highs and lows. Previous days highs and lows are almost a daily reoccurrence. Like your model can be to aim for the previous days highs and lows all the time as your liquidity pool. Because in order for this to get tackled, right, or for this gap to be traded to, or for this low to be taken out, this is a previous day's candle, is it not? So the next candle that opens is going to be inside this range. It's going to open up here. So if it's going to go higher, what's the first thing on this time frame that it has to break through? The previous day's high, if it's going to go higher. Even if it's going to come up here, we still have to get through this first candle's range. So that's an easy way to identify a draw on liquidity. If you can map it out from these higher time frames, like we do all the time, that becomes again a whole lot more important, a whole lot more consistent, a whole lot more helpful. Just as getting the higher time frame narrative down allows the 15-minute highs and lows, 1 hour highs and lows, 4 hour highs and lows to become a whole lot more reliable, right? And those things a lot of times get attacked before something like this gets taken out, right? Because if it goes all the way up there, imagine how many daily candles have to be in there, how many weekly candles have to be in there to potentially get us up here or to get us down here, right? So again, a very simplistic way of mapping liquidity. Okay, and then think of power 3, right? Think of power 3 on every time frame. So things converge and they mesh well together. But yeah, so coming from that monthly chart, that's all I really wanted to identify. That monthly volume imbalance, the upper wick up there, the monthly high and monthly low. Okay, so this is our current range of trading. So now that we scrub lower in here, and we zoom in a little bit, now what do you see? We see a bunch of weekly candles, right? So these weekly candles, do they have a high and a low? I would like to argue, yes, they do. Okay, so again, in order for a price to come up to this monthly high or monthly low, whichever one it targets, this is the most recent liquidity for the current week. This weekly high and this weekly low, if it was to end up going lower and target areas like this, maybe these equal lows become significant at some point. I'm going to definitely mark that off because that is definitely something that may turn into something important later on. Right, and then we got relative equal highs up here as well. Okay, but again, going into the week, right, we have the monthly map now. Very simple, not a lot of moving parts. I don't care about thousands of PD arrays that are like way over here or way up here. We're not there yet, so why worry about it? We have trading in here that is going to get us up there to worry about, right? Or to down here, right? We have some stuff in here to deal with before we get there. So now that we have our range overall calibrated ourselves as far as where price is at, the monthly recent highs and lows, the wick that's above us, you could see the middle portion and the importance of that wick, right? That wick, you can already see the 75% level, 50% level. We're now dancing around the 25% level. So they're acting as dynamic support and resistance. And then, of course, depending on what happens here, you know, we'll see what if the highs and the high here and the low here are going to be important. Before that, though, again, right now we have the weekly high and low. Okay, so this is what you would do here, right? You would now map the weekly high and low. Okay, because again, if it's going to get up here, if it's going to trade to the midpoint, if it's going to tackle this high, which is a previous week's high from 2 weeks ago, it's going to have to break through this candle's range first, right? So that could be the first draw on liquidity. If price opens up, declines a bit, maybe it comes back into this monthly volume imbalance, right? And then maybe that monthly volume imbalance starts pushing price higher, right? We also have an up wick here that can act as a potential area of support. I believe if we drop down lower too, yeah, we have a bearish or a bullish breaker here too. Okay, so that's going to be significant in order for us to gauge whether it's going to target down here. Like for example, if that's violated, I'm pretty confident that we'll end up trying to target down here. But again, before that, if price opens up here and drop lower, say we were going to continue to go higher, which I'm going to continue to argue until this area is broken, like I just kind of mentioned. But again, if it was going to go higher, hypothetically, if price opens up here, leaves this weekly high available, drops lower into this, and then starts to displace, seem like it's going to attack this up here, before we get up there, we're going to have to break this. Before we get up here, we're going to have to take this. Before we get to this high, we have the wick here to break down into quadrants. So all of these tactics allow your liquidity mapping to open up. But again, you want to root yourself and keep yourself centered on previous month's highs and lows, week's highs and lows, days highs and lows, session highs and lows, and then 1 hour highs and lows, 4 hour highs and lows, 15-minute highs and lows, depending on where we're at. But the baseline should be those upper time frames, right? The upper time frames have to do with the upper time frames. When you get down to the lower time frames, you're obviously going to have other things that you can also reference, like new week opening gaps, new day opening gaps, regular trading hours gaps. We got to consider the open prices. Okay, how price is navigating that with power 3. Okay, so all of that stuff is kind of calibrating you to map out liquidity. But again, it's all rooted on what you believe is going to take place around those previous month's highs and lows, week's highs and lows, and then days highs and lows. Week's highs and lows and month's highs and lows sometimes take a little while to get to. They could be wonderful draws on liquidity if you want to map out like narrative for a decent amount of time in the future. But then, of course, again, if you're more of a day trader and you want to try to figure out how to use this liquidity mapping for day trading specifically, and you're not too worried about what the monthly chart's doing, which I don't recommend you not worry about. You should worry about that. But the more continuous liquidity that will always present something every single day for the most part, previous days highs and lows, session highs and lows. Okay, because before it gets up to this monthly high, it's going to have to break through those, right? And then, of course, the weekly high here, it's going to have to break through these last couple of weeks' highs in order to get to this monthly high. It's going to have to break through this weekly low and some of this, these specific areas in here, like the gap in here and whatnot, and this order block in order for us to get to this monthly low. Okay? So, again, do you guys have any question about liquidity mapping, just like the tactic that I just talked about? I mean, I hope it's self-explanatory. It's something that people overlook because they're looking for the next shiny object, and they get so sidetracked that they can't even focus on the basics. This is like basic of the basic. And most people, if you ask them, hey, can you talk to me about liquidity mapping and like what liquidity pools are important? They won't even have an answer for you. Some may, maybe a lot more nowadays because, lots of stuff is being put out there. But, most people, for the most part, they won't be able to tell you. And if they do tell you something, it doesn't mention any of these things. They try to get super complex and try to act like they're smart, like they're some like scientist or something. It's totally unnecessary. It makes things a lot more difficult because they're overcomplicating it, And experience teaches you how to not overcomplicate. That's what I've learned over the last 6 years. And that's, I try to let that rub off on you guys too. And I've been seeing recently that it's been amazing. But yeah, again, I just want to mention, just remind you guys, if you do get value from the content, if you appreciate the stuff that I provide, definitely don't forget to like the video, subscribe to the channel if you're not already. Again, that helps me get in front of people just like y'all that I can help. That's the whole purpose of this YouTube channel. And of course, I have a free Discord if you want to get even more in-depth stuff and more active, updates and whatnot. I have a free community, and if you want like more of a one-on-one coaching style experience, and you want to get around a lot of traders that are thriving in that community is obviously available for you guys that do think you need that type of support. But yeah, I appreciate y'all in advance. But yeah, hopefully it makes sense. Does all this stuff make sense to you guys? Let me know before I move on. Again, this is a very basic thing, and you can't even imagine how beneficial it is. Even though it's super basic, it doesn't have to do with taking an entry, but in order to get to taking an entry, you want to have skills like this on the back end, just loaded up, ready for you to take advantage of. Right, so yeah. All right, so I appreciate you, Tony. Tony, by now you probably know this. You've been here constantly. There's so much stuff that's just going to just naturally just rub off on you because you're here so often. And I'm proud of you too, bro. You've been doing phenomenally just off of being on the YouTube channel, not even in the private community, but you're acting like you're pretty damn close to being in the private community, or like you're actually in the private community, the progression you've shared with me. So I'm glad that the value provided here has that level of value still, so yeah, like I was saying, we've basically mapped out the liquidity for the month, and now we're going to move to the week. So we got the weekly high and low. I just kind of talked about why this is important, right? Because if price is going to go higher to attack one of these higher levels, you're going to have to see it break this. If it's going to go lower to attack one of these levels, first and foremost, it's going to have to break this, right? So these are our monthly highs and lows, near term PD arrays that are related to this particular range in between that and in close proximity to those monthly liquidity levels. And then obviously this is kind of the weekly high and low, the weekly perspective liquidity. Of course, we have this fair value gap in here too. So we're going to have to drag this over, get it out the way a little bit so we can put this. So get the weekly fair value gap. There we go. All right, so again, if we're looking at price here, like I mentioned, we have this up wick here. If you were to break that in quadrants, I've been talking about this area in price for like the last 2-3 weeks, or since this candle ran higher. Price looks like it has now retraced. In order for me to believe that this low is going to be taken and we're done going to the buy side, our invalidation principles talk about 3 PD arrays getting violated against, in this case, bullishness, in order for us to look to short. Okay, so if that's the case, and we're looking at this weekly chart, because this is where our narrative and bias is either confirmed or invalidated, we would have to see, if we're not going to be bullish and it's going to go lower, this weekly fair value gap has to get violated. The swing low here has to get violated. And we have to break through this wick as well, right? It's going to have to just slam through, these levels, maybe even get below here in order for me to consider that, maybe there's a likelihood for us to now look to target sell side. Okay. If that doesn't take place and we stay above this, say it does what I just mentioned a second ago, where price opens up, drops down, maybe gives a wick in here, maybe it leaves the mid portion of this down wick available as it's printing the candle, right? Say it drops and stays above this and then starts to push away. That is obviously supportive of us trying to, let me actually fix something real quick. All right, so yeah, if it stays above this level, that's going to be supportive of us targeting buy side still. And then, of course, we have the high up here. Before we get there, again, we have this. We have the mid portion of the wick. We have this wick. If you break down the quadrants in that, we have the mid portion of that until it gets up into here. Once it breaks up into here, we also have this wick. You could calculate that, right? Take it from high to low with the fib. Break that in half. That's another target. All those things can be targeted on our way to building the narrative or following the narrative up to this high, if that is, in fact, what's going to take place. If it stays above this weekly fair value gap, if it stays above this wick, if it stays above this low and doesn't even try to come back down there, or it stays above the mid portion of this wick, all of that is indicative of us continuing to try to seek buy side liquidity. So I'm going to assume, given what we see here, that that is potentially going to be the case, because what in here tells you it's time to short, right? More stuff, given what I've just talked about, leans us towards the opinion that this may want to go higher. We are also inside of this range here, go from this low to that high. Technically, I think it spent some time at equilibrium, if I'm not mistaken. Yeah. So we're still kind of close to equilibrium, right? So because that's the case, we got to really get a displacement to be, 100% confident. I'd say I'm like 85% confident that we're going to get up to the highs up here, just because we're inside this specific equilibrium area. This is going to be very, very influential, this fair value gap. Whether it holds or not is going to decide whether I want to go higher or not. Okay, and then of course, if we start breaking down into here, that's when I can start to paint the narrative confidently, high 90 to 95% confidence that we're going to end up targeting down here. All right, so yeah. So this process I've just laid out for the 100th time has proven over the last 3.5 years to be extremely accurate. Okay, in terms of validating and invalidating a narrative. All right. Not only has it been public, it's been in my private community, it's been in the free Discord, and it's been again here on YouTube. And it's just undeniable how this stuff takes place. It's undeniable the value and importance of these things that I'm talking about. And it's also very undeniable if this is your first time hearing about the liquidity pools that I just mentioned. It's going to be very undeniable that you always have something to trade off of. Doesn't mean you should always be trading and be in the market always, but again, there's always something to frame a setup off of continuously. Because why? Because these levels are not going to disappear. There's not all of a sudden not going to be a monthly high, weekly high, and daily high and low, or a session high and low. Is that magically going to disappear? No. Okay. Obviously, depending on what the higher time frame wants to do, that's going to dictate which one of those levels are going to be significant. Okay. But again, this process I've just laid out, again, for the 100th time, really helps you narrow down what is going to be targeted. Okay. And what does that bring you? Right? The process I've just laid out here for validation and validation, along with the liquidity mapping technique that I've been teaching for so long. What does that give you? It gives you clarity. What's the purpose of this channel? To give you clarity, right? And then you decide what the entries are going to be. Sometimes, obviously I give signals here and there, but as you guys know, I don't promote that. Okay. If you want to watch somebody and just take their trades, you're going to hate my channel, and that's totally fine. I'm here to help people learn, like Tony, like Yana, many others that hop on continuously, and any other people in the future that want to actually learn this skill set. You have a home here in the WMG trading family, and that's who I'm catering to. I'm not going to cater to signal junkies, and I encourage you guys not to do that either. Don't fall into the trap of that way of thinking. Long term, it's a horrible investment, and it will make it so you never, listen to me, it'll make it so you never become profitable, ever, and ever use this as a valuable asset to you, ever. Okay, if you want to just seek signals, nobody's going to be able to help you. You're not going to be able to learn shit from anybody. Nobody's going to want to put up with you, first of all, because it's just annoying, especially for those that have been trading for so long, that have put so much time into this, just to hear someone come and bitch and moan about, oh, this signal, like, no. Okay. There's other places that you can go to be lied to, and this is not one of them. Okay. ICT's whole channel is not that type of place either. So, just some hard facts, because there's always that little straggler, right? That little random person that pops up talking about signals and this and that. And trust me, just don't do it. That's how I blew $12,000 in less than 3 months when I didn't have the money at first, when I first started. So there's a cold place in my heart for the liars that push them, that push the signals, that really don't know what they're doing. There's certain people that are really big on YouTube that push signals that suck. But, then again, there are some people that push them that are really, really good, and there's nothing against those people. It's just the people that don't come out here and trade live and just send out signals, or, the people that are just looking for signals to trade, and are, and they act entitled. It's okay. Signals are cool. That's fine. But again, it just depends on your goals and depends on your demeanor as the signal purchaser. How are you viewing things? And are you actually putting an effort into understanding the person that you're taking signals from? Because, signals are great to learn, to try to identify good setups. For the most part, majority of people that are giving them suck ass at trading. They don't know what the hell they're doing. So in turn, your account's going to be blown, and you're going to pay them for no reason. And you're going to hate trading, and you're going to call it a bunch of names and all this nonsense, and not even give yourself a chance to be successful. So again, I just want to throw that in there. Okay. Let me look at the chat. Tony said he's one step away from changing his life. I appreciate you, bro. You've been showing up probably the most consistent on YouTube out of everybody that's come to my channel, and it's not you and like a handful of others, and it's not a surprise that you guys are seeing progress. The fog of the market, the fog of war in the marketplace is clearing slowly but surely. Each video you hop on, each live call you get on, and every time you go into the chart with the right mindset, which is what we try to cultivate here. So you are proof of concept. Aside from me just coming in and proving that I'm calling the market every single week for the last 3.5 years, all that stuff's proof of concept. And, it's very exciting when I see people like you succeeding, because, it just further reinforces just how amazing this stuff is and how transferable it is. I have my little brother too that I'm trying to teach as much as I can, pointing him into the right direction with the different videos and my videos and the proper mindset. And he's been trading for, I think, less than a year at this point, and he's making some amazing progress. Okay. He just started. I have a student named Harley that's been with me for a year and maybe a month, and he's already crushing it in a private account. He doesn't even need a funded account. He's put $5,000 in an account, and he's just crushing it. I think he's made like close to $2,000 in like 2 months on a $5,000 account. Like, think about how insane that is. That's almost 100% return in just a few months. And he's came to me early, so his sphere of influence has been ICT and me, as far as I'm aware. And that recipe, from what I can see, has been extremely, extremely effective. And Tony, I see you crushing it too. So, you're an example of it too, so yeah, I hope you guys get value from the things that we talk about, and if some stuff's confusing, again, use the chat box, DM me, join the free Discord. If you need more one-on-one type of style coaching and you want to be around a bunch of people that are kicking the shit out of the market every week, provably, right? Like posting and sharing and providing evidence that, they're not over trading, they're not over leveraging. If you want to be around that type of environment, we have our private community that's available too. That's all. It's the same in the free Discord as well. It's just taken a little bit further, and there's a little bit more support in the paid group. But whichever you choose to do, free community, YouTube, or my private community, you're still going to get tons of value, and it's only going to ramp up and get more and more and more valuable as I continue to pump out different things and highlight different things, right? So far, I hope this makes sense in terms of this asset. The process that I just used here in terms of liquidity mapping and all that, validation and validation, it's the same across all assets. Don't be confused just because I'm looking at this. It's going to be, it's transferable to all different assets. Okay, monthly highs and lows, weekly highs and lows, daily highs and lows, all those different things. They are all universal. Okay, every asset class has them. So yeah. So again, I hope this makes sense. So we'll move on to the next. So if the yields are going to go higher potentially, we would like to see the bonds go lower. They'll just do the opposite. Again, I'll probably leave this. It's pretty much the same, right? Monthly high, monthly low. We have current monthly low, current monthly high. If it's going to target down here, it's going to have to break through the wick down here. We're going to watch the wick response. What is it going to do in here? Right? Is it going to hit this and rally, or is it going to just slide through? If it slides through, we have inversion fair value gap here. Another one here. This is an overlapping fair value gap. So this will create, if it gets below it, which it has, if it returns back and then rejects away from that, this is probably going to act as a balanced price range. Can also drag this over as well, right? So there's decent amount of resistance that may end up pushing price lower here. So yeah, we will see how that's going to behave. Okay. So yeah. So I think that's where I'll leave this one. It's pretty much, taking what we talked about over here and just transferring it over to this asset, right? So it's going to be the same thing, right? I'll leave that for you to do. So if we look at the currencies here, okay. Last week I was assuming that price may look to decline and then rally. We have gotten the decline slightly. It's just a big slop fest. This is to be expected going into a new week or a new month. Sometimes a new week. But for the most part, this is the result of a new month. We're transitioning from one to the other. So again, I wouldn't be surprised if we do get a retracement into here. Depending on how it behaves down here, though, that's going to be very influential as far as whether I think price is going to want to blow out more of the highs. Price did blow out the significant high, so significant high was taken, aka external range liquidity in this regard. Then followed by a retracement off the heels of that, right? So when a high gets taken like this or a low gets taken, generally it's not just going to go one direction. It's going to take that, especially if it's a monthly, weekly, or daily high, and it's going to look to retrace for internal range liquidity. How it responds from this internal range liquidity, that's going to be very, very influential as far as whether it's going to continue to jump up, here or not. In this case, okay. So if it was to start smashing through this level, smashing through these levels, we have a gap in here, fair value gap, and the midpoint of this wick. If it was to break through those levels, then obviously, we're going to have to consider the price is going to maybe take a deeper retracement. If we're looking at just this time frame, if we break this low here and get below the midpoint of this, I would not be too confident that we're going to continue going higher, honestly. Obviously, that's not in the cards yet. So my anticipation is to see price come into here, see how it behaves in here. Do we get a displacement up there? If it does get a displacement up into here, in order to confirm that continuously, it's going to have to violate this as it pushes higher. It should show no effort in holding it to go lower. It should just slide through like a knife through butter. And then, of course, target the further buy side. We also have a little bit of a fair value gap in here. So let me mark that off a little bit. All right. So yeah, and then of course, like I just mentioned, the process that I talked about in the bonds, it's universal. So I'm going to leave this to you, right? I'm going to let you go do this to get the monthly high and low, the current monthly high and low, right? Previous monthly high and low. Which one's probably more important? Well, this previous month's low is way down here. How likely is it, or how much more likely is it to get up here and be usable versus down here? It's probably much more likely that it's going to utilize this up here, right? This only becomes interesting if it gets way down there, and that's going to take a while. Who knows? Maybe a couple months if it tries to get down there at all. We're not in a bearish environment right now for the currencies or the indices for now. So again, we're going to just continue to march higher unless 3 PD arrays get violated to the downside on this weekly candle. That changes the narrative long term, right? That'll give a more significant change in the state of delivery from bullish to, in this case, if it breaks down here to bearish. Okay. Otherwise, again, we're just going to continue to march higher. We're on this weekly chart, so we have previous week's low mixed with a fair value gap, mixed with a up wick. Okay. So it should, if it wants to go higher, I don't think it's going to want to dig lower too deeply. Maybe it does, maybe it doesn't. I don't really assume that because this wick traded so deeply into this fair value gap. I think it's going to be very shallow, and I think this was a very shallow run on the buy stops. I think they're going to try to finish that off, maybe trigger this in for the weekly power 3, tackle that real quick, and then just start really expanding to the buy side. There's it's not really much that's interesting at the highs for the most part. If we go to, I guess you could see this SMT that's there. That SMT, given the fact that the overall delivery hasn't changed from bullish to bearish because those higher time frame levels haven't been taken, I'm going to just assume that this SMT was just to trigger in the retracement to these lower levels here to possibly continue going higher. Okay, so that will be my assumption. Plus we have a bearish order block here. So I'm going to definitely mark that out. It's a daily bearish order block. Okay. So yeah, if it takes out the load or takes these lows down out here, and it starts to really ramp higher, if it gets above this high, obviously that'll target up here. Until it gets up here though, right, depending on how it responds in here, I'm going to want to see how it wants to behave, right? We are in a consolidation, sideways movement. If we can get price to displace higher and break this high, and not give like a wick and then start to go lower again, I'm definitely confident that this will be the draw. And guess what? This here is a previous week's high. You see these gray areas? Those highlight different weeks, right? So having an indicator like this is super helpful to identify the liquidity mapping tactics that I've mentioned to you guys today. Okay, so yeah, we'll see how price wants to behave down here. This SMT, for the most part, at this moment, seems to have just been used to push price down into this level. And we'll see how the behavior is going to be down here at these lows. We'll see if it wants to leave like an SMT here too. If that's the case, then again, we're still pushing higher unless, in this case, multiple PD arrays down here get violated. Especially if we start to see this continuously being respected. So far, the bearish order block has been respected. If it stays below that order block, then again, we'll probably look to continue going lower. But I'm assuming, at least for now, because nothing's fully changed yet on that weekly chart, that we're going to continue to go higher. Okay? This, in my opinion, was just used to position short positions to come down, maybe victimize the sell stops, pair orders down there for them to buy, and then possibly continue to target buy side. So yeah, we'll see if that is what wants to continue. And I'd prefer to see us stay above this weekly fair value gap here. And I believe there's also one here somewhere. If we look at this monthly chart, it's definitely filled in a lot of that. So again, external range liquidity was taken. So reaching down for a retracement just makes sense, especially if it's going to go higher. So, you know, we're going to continue to assume that that is what price wants to do. We also have a quarterly bullish order block here from the 3-month chart. So maybe that becomes significant. How far is that? It's kind of a decent time away. Those of you that were with me, I believe last month, we saw last month we saw price dig into a yearly bullish order block on the continuous contract on the NASDAQ, and then do this type of behavior from a yearly order block. Okay, so this stuff is so universal that it goes to every time frame. And sometimes when we're very close to levels like this on the super high time frames, that could lead to something very significant. That low on the NASDAQ, go into the continuous contract on the NASDAQ, go to the yearly chart, and you'll see there's a yearly bullish order block that has started the rally higher that we've seen in the NASDAQ. It's fascinating. And we were ahead of it, right? We pointed it out in the moment, especially in my private community. I did share it here. I did share it also in the free Discord, because it was fascinating, right? To see that low form, and price from that point on has not come back to that yearly order block or the low that was formed, right? So it's fascinating. So maybe a very similar thing can take place here, right? So yeah, we'll see what happens. Okay, I'm just gonna keep that labeled, you know, just for future sake. Right. So yeah. So I hope everything's made sense so far. So my assumption, in a nutshell, you know, I'm keeping these things that I've mentioned in our view. We also have new week opening gap here. New week opening gap in here. Okay, so we're also below those levels, so I'd like to see those get purged to the buy side. And then, of course, you know, this large wick that I just talked about, I'd like to see us stay above that, or just barely trade into it if we are going to continue going higher. And it's going to be trustworthy to continue going higher. So, yeah, we're going to keep that in mind. This I've had outlined for the last, 2 weeks at this point, for price to go lower, then go higher. Again, we have a fair value gap up here that may get targeted. It's been left available, so we'll see how price wants to either target it or not target it. Okay, so I hope everything makes sense so far for the currencies. If not, let me know, and I will backtrack and come and talk about it. But yeah, don't forget the monthly highs and lows, weekly highs and lows, previous days highs and lows. Going into today's trading and tomorrow's trading, we want to keep in mind Friday's high and Friday's low from the previous week. That's another pool of liquidity to add to your list if you haven't already, if you haven't really known about it. Very important. Okay, so right now we see that the DXY has tanked and retraced. We have this as a bearish breaker here. Okay, we've been using that particular area in price as something significant for a while now. As price swept this, we also marched this whole entire thing down in a market maker sell model idea. Continuously we're walking NASDAQ like a dog throughout this entire delivery, both to the buy side and to the sell side, completing the market maker sell model framework on this upper time frame. But yeah, so just like the other assets, I'm gonna leave this for you to go do as well. Previous month's low and high, very close proximity PD arrays in here. If we drag this over a bit, we could see how there's still a little bit of this fair value gap down here. So if the DXY was going to want to continue going lower, that'll probably be what it targets. Before it blows that off, though, and finishes this fair value gap, what does it have to tackle? It's going to have to tackle this previous month's low. Okay, so the previous month's low and the rest of this fair value gap, if price can start to displace again, can be a target. But before that even takes place, we can also break this wick down and get the quadrants in there for multiple extra targets before price gets down here. So yeah, very, very useful. So yeah, I hope that makes sense. So go in there and find your monthly high and low and close proximity PD arrays in your own chart. Okay, now we go to the weekly chart. We got this weekly fair value gap. Price traded up into it a little bit. And then, of course, the bearish breaker idea that I just talked about from that monthly chart. So we'll see what happens here. We got a down wick in here, fair value gap, inversion fair value gap, and the breaker along with, you know, this high that was just taken out. This is a previous week's high. So maybe the new week starts, opens up, maybe runs a little deeper into this fair value gap, and then starts to seriously take a nosedive and then go to those levels that I just talked about on that monthly chart. And then, of course, this is the monthly low that I talked about. Below that is the rest of the monthly fair value gap. So again, I would really like to see us get down into here. That would be ideal. But to start the week, we think of power 3. Price can open up, take this previous week's high out, position them on the opposing side of the trade. That's going to go lower, and then send price lower from this fair value gap. Possibly even using this as an institutional order flow entry drill to get us down into that area. I would think that that could be the case because there's a breaker here. So I may leave this open. There's a breaker here. There's this fair value gap, and then there's also this fair value gap. So, may not have to come down or come up into this too deeply. Maybe it opens up for the new week, wicks through the high, positions that liquidity on the opposing side, triggering them into buy, and then smart money could look to tank the market from there, targeting the rest of the fair value gap down there. I can tell you that if we break through this fair value gap, this inversion fair value gap, this wick midpoint, my attention would potentially go up to this high. Before it gets up to this high, though, we have this high, so on and so forth, right? But again, that's not in the cards yet because we have to see price provide us evidence with that. What evidence is that? The 3 PD arrays I just talked about. Fair value gap, wick, midpoint, and then this fair value gap. Price breaking through that, maybe even using them as support levels, and then continuously displacing higher, may change what we see in price currently, right? It may end up looking to target buy side. Maybe it turns into a market maker buy model, right? If it breaks this high, that's what my opinion would be. I would think that, this down movement to take these people out, completing the market maker sell model, may set us up to then target a market maker buy model framework. We don't know just yet. I do assume, given what we've seen and the fact that there's also a quarterly fair value gap down here that I just mentioned a second ago, I think that we're not done going down there. So again, but the invalidation for that idea is obviously these levels I just talked about, the wick, this fair value gap, and this fair value gap. Otherwise, if we stay below that, as you can see, we're watching how that's treated. If it keeps that intact, then we're going to target sell side. You also have this previous week's low before it gets down to here. So that may be a very short-term, near-term target, one of the more near-term if we're going to continue going lower. And then, of course, like I said, this high here could be used possibly to trigger in from this fair value gap the opposing side and then have them target the sell side. That's my assumption. That's what I'm going into the week trying to see. That supports buy side in the indices. So we'll see if that's going to continue. And yeah, short and simple. Hopefully it wasn't too complicated for those of you that have been watching and watched the replay. But yeah, if you have questions, let me know. Again, just another reminder, if you get value from the content, definitely like the video, subscribe to the channel, share with a friend that you think can add to the conversation or can give value from what it is that we do here. Because I don't just talk to talk, right, to hear myself speak. I'm here to help. And the more good people that we can get supporting the channel, the more you guys can support me by doing simple things like liking the video, sharing the content, and subscribing to the channel. The more you guys do that, the more you help me. And then that's also the more that you help me help other people, so because that's the goal, you know what I mean? So yeah, thank you in advance, right? So I hope all this makes sense so far. If it does not, and there's a question, let me know. Otherwise, we will be moving on. All right, so let's start here. Huge wick. What did this wick reach into? It reached into that yearly order block. Okay, again, I'll let y'all, if you haven't seen that, go to the yearly chart on the continuous contract for the futures, for NASDAQ futures, and then go look at it. It's pretty amazing. And we were there right at the beginning for it and called the response as we've been, calling things continuously for the last, whole year at this point. And aside from that, the last 3.5 years. But yeah, so where we're at right now, we're at a fair value gap. Price is definitely running up in this monthly chart. So we do have an SMT here, which may end up being something impactful. If DXY continues to fall, that'll probably be short-lived. This is the monthly chart, so it may take a little while. But again, current monthly high, current monthly low. You see this previous month, we already blew out previous month's high. Okay, so that, that high got blown out on its way to this fair value gap. So you could see what we've been talking about in terms of liquidity mapping. You could see it in play, You could see, reasons as far as, why price should do a particular thing, go higher or lower. And now you can kind of see where, what are the most common things that it reaches for. The list that I've given you today perfectly highlights that, right? What those levels are. And they're here all the time, every single day. They never change. And that, therefore, means that you always have a thing to trade off of and a setup to frame something off of. Okay? And our liquidity pool you could frame a setup on. All right, so no worries, Fritz. Appreciate you hopping on, brother. But yeah, so very sloppy in here. Not much we can go off of aside from new week opening gaps. So yeah, new week opening gaps generally they can get used up to 6 months, preferably 3 to 4 months, just for like previous quarter or current quarter new week opening gaps. They always get reutilized. I've seen ICT use stuff from a year ago in terms of new week opening gaps, which is pretty fascinating. But yeah, I'm not going to do that. You can do that, but I'm not going to do that. Seems it's just too much. There's already enough to worry about. But yeah, so again, just like we did on the bonds, we're going to look at the monthly high, monthly low, previous high, previous monthly low, and then anything in close proximity to get our liquidity mapping, important liquidity pools, and just our range that we're working within to start the week. In this case, to start the month. We have this fair value gap, so that's significant. Actually, put that there. Put the, if I could find it, probably not. All right. Right. So yeah, it's the monthly fair value gap, and we got eyeball the 50%. So now we got the 50% level in there as well. Okay, so we're gonna want to see what the response is gonna be here. So far, it seems like it's still drawing up. So we're going to continue to assume that that's what's going to take place, especially with DXY tanking. Obviously, if that changes, we have no problem adjusting. But so far, it seems as though price is attacking the high up here. It came up all the way to this wick. For those of you that have been sticking with me, I've been saying that if this high can get violated, then that'll probably send price even further to the buy side. This high to that low, the failure swing here, and this quick run back above this high This is a type of dealing range. Okay, so if this type of dealing range is created, it also should be presenting us with the balanced price range as we break this high. And you could see the middle portion of this high to that low never got traded to once we broke this high. So that is further indicative of price wanting to go higher. This is a type 2 dealing range. There's a type 1 and type 2. But yeah, I'll maybe talk about that another day. But essentially, this is like a balanced price range. Okay, that's how you could classify this. And that logic has held up. You know, me and my private community talked in great detail about what's been taking place in here. I think I shared some in my free Discord as well. But yeah, there's some complexities in here, somewhat advanced topics. But nonetheless, you can just identify that the balanced price range idea, this style of balanced price range being intact, led us to confidently targeting the buy side. I was calling for buys in the Discord. I was calling for buys, since we got above this high. And then now since we got above this high, I'm still going to keep calling buys until we get proven otherwise. We have this fair value gap in here that's most likely going to act as support. We're kind of a little bit too busy for my liking. We have Friday's low in here. We're going to keep that there. I think, let me make this smaller. A little too busy, yo. Just a little bit. Just a little bit. All right, so yeah, I was calling for this fair value gap as price, got above this high. My attention went up into this fair value gap. I believe I sent it in the free Discord. If not, I 100% talked about it in my private community. They know that we have been following this all the way up into that level. Was a little bit more tricky last week. I did end up taking a loss last week. But, again, you can't win them all. But the narrative, that's what matters. And the fact that we manage our risk properly, that's what matters. The fact that none of us blow our accounts and haven't blown our accounts, that's what matters. Okay? The consistency in how we call the market, that's what matters. Are we able to prove it? That's what matters. Okay? And, one loss here and there doesn't really affect anything. It just continues to promote the fact that there's risk in the market, and we will not be perfect, and that's why our rules are what they are. That's why I talk about what I talk about. That's why I continuously talk about certain things that have to do with risk and where people should focus that don't necessarily always aim at entries, because the entries and bias tactics and all that doesn't matter if you can't make money, if you can't save your account, if you can't keep your profits and minimize your losses. None of the other tactics matter if that is out of sync. If you don't have a process for that, if you're in such a fevered journey, like trying to aggressively attack, like hurrying up and getting profitable, that you just totally overlook the importance of risk management, you're doing yourself a disservice, and you don't want to do that. It's just going to be very painful, and there's going to be no reward for that type of behavior or mindset. Okay, so there's a reason I talk about it continuously, and yeah, it is what it is. So yeah, because we reached up into here, I wouldn't be surprised if price does look to want to maybe wick down a little bit. I'm not too confident that it's going to try to take a deep retracement. Maybe it does. I would prefer it not to do that. I prefer it to stay above the wick midpoint here, maybe even above this one. And I would like to see this fair value gap potentially act as support, and then maybe send price, through the high up here. But yeah, this is going to be my draw for the week. Let me actually move that up there. So this is my initial draw. Obviously, everything is always subject to adjustment if needed. But I'm fairly confident that we'll get up into here. We have hit a higher time frame PD array going into this new week. So again, I wouldn't be surprised if we do take a decline, try to reach down into here. I preferably want to see us stay above this. Friday's low could get swept. It may fill in the rest of this gap, then go higher. That's totally permissible. So if price starts up here, ends down here, you know, even if that's just what the week does next week, so be it. We'll be able to adjust in that regard if that's the case. Thinking of Power 3 and many of the things that we talk about. But overall, I do believe that price has an interest, unless it changes and maybe gets below these areas in here, and preferably breaks down below this. That'll kick my interest back into sell side, very meaningful sell side delivery, possibly looking to target down here even further. Obviously, before that, it would reach into this. Before this, it would reach into this. Before this, it could reach into the wick here and this low, so on and so forth. Before any of that takes place, though, it has to break this low, right? So, and then of course, before it gets below that low, it has a wick down here. So multiple PD arrays in there in terms of the wick quadrants that could be used as targets if price does want to show that there's more interest in it wanting to tank. I don't assume that's going to be the case unless it proves that that's the case, and we can only determine that when the time comes. Okay, Friday's low, Friday's high. These are the first liquidity pools, similar to the weekly high and low I talked about when we go into a new week. Well, this Friday's high and low going into the next day, or Sunday and Monday, can generally be similar importance, right? But on a daily basis for the start of the week, because this is the most recent liquidity, and if they want to go higher, if they want to sweep up a very quick, very short term, very close liquidity pool, aside from all the other ones that we talk about, this is a very large daily high and low. So if something opens up, declines for the weekly range, maybe sets up the manipulation for a bullish power 3, for them to get the opposing side into the opposite end of the trade so they can position buys and engineer a loser. This is a beautiful area for them to do that because there's guaranteed liquidity down there. And then, of course, they'll use that liquidity they sweep up to then target the buy side up here with buy positions. And then this is where they will take profit, right? So they'll dump their buys up here after they've caused all this pain on the sell side. And then, of course, up here as well, they'll be selling to willing buyers above this high. So there's probably a buy stop up here. Someone's looking to, see price go through it, use it as support and go higher. Price very well may run up there, take the stop, and then retrace back in. It hurt them. So not only if that takes place, not only did they hurt these guys and get in a beautiful run higher, they could also do a very similar thing up here, trigger these people in, and then turn around and retrace to drag them in and make them losers as well. Tony said you can see the FVG with all three of them. Yeah, you definitely can. 100%. When you see an overlap, that's a good thing you pointed that out. When you see an overlapping PD array like that across multiple higher time frames, even if you go down into the lower time frames, it's a pretty significant factor because then it shows you like there's really something going on in that level. So it'll probably be very, very, very reactive because almost every time frame agrees. And that's a type of confirmation. Does consequent encroachment of the wick to the left of liquidity void aside the fair value gap add as internal range liquidity? Are you talking about this here? Technically, this is not a liquidity void. Is this the one you're talking about? So this, just one more confirmation. This is the one you're talking about? Fritz, give me one more confirmation. Yep, okay. Okay, so this is actually a volume imbalance. This is a liquidity void. Very important lesson here, okay? So yeah, this, here, let me label it. So what is the difference between this level up here so what's the difference between this up here and this liquidity void down here? Okay, perfect. Yeah. The wicks overlap. So what does that mean? Because the wicks overlap that. What does that mean? Was there trading in that area? Was it void of trading or / liquidity, or no? If a wick trades through it. Exactly. It's delivered to some degree. And void means there's none. There's like zero of whatever that is that was supposed to be done. So because there's zero in there, there's no trading in there. It'll act as a magnet at some point. Price will come down. I'm surprised that they kind of left it open. They were in a very strong hurry to get up to these buy-side liquidity pools up here. That's a strong recovery inside, this delivery. So it makes this type 2 dealing range I talked about even more significant for those of you in my private community. Price has delivered to some degree where the void has had no price movement even on, yes. Yeah, exactly. So yeah. So glad I was able to clear that up for some of you guys that may not have known the difference between a volume imbalance and a liquidity void. Right? So yeah. You can see they've been in an extreme hurry to get up here. So where could they possibly be? Let me ask you this question. Do you think there's more liquidity above this high or this high? If you were to guess. The first high or the second high? Let me know. So they're kind of both weekly highs. Right? So this is a weekly high, that's a weekly high. High 1 or high 2, which one would you guess has more liquidity? High 1, high 2. High 2, exactly. So this hurry, although they got up into here, I'm assuming that they're probably reaching up to this high. Okay, so if we go to the weekly chart here, is that what you were referring to? I mean, technically they're both weekly highs, obviously. They're both weekly ranges here. But, I mean, you could just see this is a fractal high on this weekly chart. You could see that if they were going to run up into here, there's probably been more accumulated at that high. So it seems like we are racing towards, yes, this high, which we've been talking about, and this high, obviously. But it's been in such a hurry. Was it in a hurry to get up to these highs? Maybe that was part of the equation. But for the most part, I do believe that they're in a hurry to get up into here. Yeah, I guess I can agree with you on that one. They're still weekly highs though, right? Because you see the gap in here from gray area to gray area. It's a week, so it's a weekly high. This is a weekly. This is the weekly fractal high. So yeah, it's pretty valuable in terms of the high classification. Okay, so yeah, again. This is my overall view of what I believe price is potentially going to do across all these different assets. I'm assuming that DXY, if it continues what it's doing, is going to continue dropping lower. Right? We don't have to spend much time down below because what are we doing? We're mapping a narrative. Does our narrative come from 5-minute or 15-minute? No, not at all. No, it doesn't. Where does it come from? It comes from the higher time frames. So ICT said something that stuck with me and still sticks with me to this day, and I've mentioned it before. People asked him, what is the one area in your analysis that you study and focus on and live in the most? His answer was, I stick to the higher time frame. That's an answer to many things. Where should you focus? Higher time frame. What's the best way to master narrative and bias? Higher time frame. What helps you gain the most clarity? Higher time frame. What makes it so I can get bigger moves for the entries I take on the 1 minute and 5 minute? Higher time frame. Frame it on the higher time frame. So no matter how you look at it, the higher time frame is always going to be most important. So that's why you never see me dropping you guys down on a Sunday to the 5 minute, 15 minute, so on and so forth. Why? Because we're mapping a narrative. We're mapping the battlefield. We're trying to figure out where the victims are, where price is most likely going to go, and how we're going to look to potentially operate in one direction or another, what validates or invalidates, and how we're going to go about applying that process confidently. And then obviously, what it looks like on the higher time frame. If candles are super overlapping, really small, choppy, sloppy, back and forth type of ranges, that can also lead us to having a consolidated anticipation for what's to come. But that small range, if a day prints that and there's a news event on like a Wednesday, generally Wednesday is going to be anticipated to see price run in an expansion style day, because small ranges lead to large ranges lead to small ranges. All right, let me see. Hello, do you think if I use 4 hour as my bias and 15 minute as my change state delivery, 1 minute as an entry is good enough? It just obviously is very subjective. It very much depends on you. I'm not 100% entirely sure why you wouldn't include the higher time frame. ICT trades on the seconds charts, and he still uses quarterly charts, monthly charts, weekly charts, daily charts. So I'm not entirely sure what the benefit would be just to use the 4 hour. You're not going to get more setups that way. You're not going to have any type of advantage by looking at just the 4 hour, 15 minute, and 1 minute as your entry. You're just going to, you could kind of decipher it, but think about it. If I'm on the 4 hour, is that monthly or what was that? Was it the weekly? Yeah, you see the weekly fair value gap here? If I'm on the 4 hour, is that weekly fair value gap even available to me to identify? I can't even know where that's at. I don't even know where the low of that fair value gap's at. I don't know where any of it's at. Again, obviously the 4 hour is somewhat of a higher time frame, and obviously it's very dependent on your style. But I am of the opinion, and will always make the argument, that no matter what style trader you are, whether you're a scalper, whether you're a micro super seconds, 1 second style trader, I will always make the argument that the higher time frame, daily, weekly, and monthly, are always going to be beneficial to ground you in where price is headed to, with the most clarity on that higher time frame, even when you drop to the lower time frame. Even if you're just going to glance at it and do what I did this morning and just identify critical areas that are close to price and keep that on your radar as you navigate the lower time frames, and look for the lower time frame liquidity pools, which have to do with daily highs and lows, session highs and lows, 1 hour, 4 hour, 15 minute highs and lows. Really just depends on your style. But I will forever make the argument that you at least, at a bare minimum, need to have the daily chart. So daily, 4 hour, 15 minute, 1 minute. I don't even think you should skip the 1 hour. If you're going to use a 4 hour, you should have the 4 hour, 1 hour, 15 minute, and 1 minute as your potential areas of opportunity. Obviously, the higher time frames that you use are to frame the narrative. The lower time frame, once those higher time frame levels are met, like you mentioned, the 15-minute change in state delivery, once that takes place, and you hit a 15-minute PD array that you're anticipating price is going to move from, then you go to the 1 minute to find your model performing within that 15-minute PD array that you're using for the change of state of delivery, or for the delivery of whatever idea you're looking at. So daily 4 hour, 1 hour should be for your bias. 15 minutes should be for your setup or framework, maybe even to the 5 minute. And then 1 minute, 5 minute and below should be used for execution. just to shrink the risk a little bit, to get closer to price. That's pretty much all those lower time frames should be used for. People should not be married to those lower time frames. If you want to get more than the minimums, 20, 30 points in the S&P and NASDAQ, or 5, 10 points in the S&P or whatever, you want to be able to frame things on like the 5-minute, 15-minute, 1 hour, right? If you guys watch Jade Cap, what do you think he does? His style of trading is framing things from a higher time frame for the narrative, getting the trade idea on the 1 hour, executions on the 15-minute. He don't even drop to the lower time frames. He does sometimes, but he's more of a swing trader, more of a short-term trader, right? So he'll hold it for a large gain, but the large gain only comes because he understands the higher time frame, and he's okay with being patient. He's worked through that patience over the last 15 years. It doesn't have to take us that long to understand that concept. I learned that concept within the first 3 years. How the higher time frame gives me my narrative. The 1 hour, 15-minute, 5-minute creates the opportunity for me to get into a PD array that should be highly reactive. Once that level's met and we're going to be headed in the direction of my higher time frame narrative, then I use the 15-minute or the 1 minute and the seconds charts to get closer within that higher time frame narrative, so I can shrink my risk. But the framework comes from the higher time frame. Okay, the framework. What am I executing my trade off of that should act as a launching pad that's going to send me a decent amount in a particular direction towards that higher time frame? It's framing from something above the 5-minute, but executing on the lower 1 minute seconds charts. Right, that's where I find my model, is on those lower time frames. But this is how you want to configure your top-down analysis. You don't. I mean, you kind of mentioned it, so I think you somewhat have a grasp on that. H, if that's your name, H. You did point out something very, very important. I like how you are classifying it. So you are onto something. You're not wrong in your overall question. Is it good enough is obviously a very subjective question. Depends on you as the trader. But the calibrating of your process, your top-down analysis, obviously, again, like I mentioned, all these things are super important. And again, I feel like you do have a grasp of it. I would encourage you, if you are asking for my opinion, I don't think you should leave out the daily chart. I mean, you're so close. You're already using the 4 hour. You might as well just hop up on that daily chart. Where's a daily fair value gap or daily something? So then you could use the change in the state of delivery that's inside of like a daily bearish fair value gap. You could use that push lower, go to the 15-minute, find a change in the state of delivery that's pushing away from that daily PD array or 4 hour PD array. And then once that takes place, drop down to the 1 minute after the 15 minutes already delivered from a level within that higher time frame, and then find the execution. So your risk could be very small or somewhat smaller, and you could get a little bit closer to price. But yeah, I hope that answered your question. You did point out something extremely important, and what I just laid out is extremely, extremely important. Okay, it's extremely important to know how to calibrate your mindset around how you're doing your analysis. Oh yeah, no. Tony. This man withdrew 3 million. Okay, he is a savage. That's what 15 years will do to you if you stick closely to what's happening and you focus on the right things. It took him 10 years to be profitable. 10 years. Okay? Some people are freaking out and worried about 6 months of not making money. Like, are you insane? Like, bro, what? Like, it's totally insane. The mindset, we look at these people that seem like they're overnight successes, but they've had years. Like, I've spent half a decade plus 1 year, 6 years figuring this out. Like that, and dude, I mean, it's it takes so long, so much longer than we ever imagined. But then again, there's obviously some, which maybe you guys are some of the few that it only takes a year or two. You never know until you just keep trying and trying and trying and pushing, studying as hard as you can, in a reasonable capacity, obviously. But yeah, it takes time. Enjoy the process. Fall in love with what it is that we do. Because I'm telling you this right now, ICT's mentioned it too before. If you don't love getting on the charts, if you don't love talking about trading, if you don't love looking at these candles tell you the story, and you don't love watching stuff that makes you better, if you don't love reflecting on your trading and just the whole process that we employ, if you don't absolutely adore it and are in love with it, this isn't going to work for you. Do you know how many times we have to face failure in this industry? There's not a career on this planet that makes you face failure over and over and over and over for sometimes as far as a decade before you can actually see success for some people. There's not a career on this planet that makes you go through the mental stuff that we have to go through, yet still show up every day and be confident. There's not a thing on this planet that can relate. So again, that's why there's a very small portion of the population across the globe that can actually do this successfully. It's increasing in numbers because of ICT, obviously. And students that come out and share their opinions and look to help others that are actually effective. Obviously, that's going to increase the velocity as far as how many people are going to at least become successful in some capacity. But for the most part, most people don't stick around because they don't realize the reality. And people don't like to hear the reality. But I'm here to tell you the reality. And most of you guys that are here that come and watch my content, pretty much like all of you guys that show up consistently, you guys know the reality, and you're still here even though I've shared the realities with you. I've shared my issues, struggles that I went through, how long it took me. If you're looking at Jade Cap, or anybody else that's making tons of money off trading, they're not overnight successes. They didn't get it in a week. They've had their turmoil. A lot of them talk about it. It took them years, thousands and thousands of dollars, and always feeling like a failure and constantly having to battle that inner conversation, constantly refining their process till they figured out what made sense to them. Blowing accounts, dealing with normal life situations, coming into trading and still trying to stay level-headed. Like that's a whole growth learning process in itself, aside from technicals, So again, there's so many things that have to be mastered, and it just takes time. So again, like I said, if you don't love this industry, if you don't absolutely adore this industry, if you don't obsessively love to get onto the chart and can't wait to see price print, and you can't wait to make a forecast and see if it plays out, and even if you get it wrong, you still love it. If you can't adopt that mindset, I'm telling you, it is going to be extremely difficult, because you got to be resilient. And if you don't have a passion for something, it's going to be very easy for you to find reasons to give up and quit, especially if you're only in it for money. That's why I say all the time, you got to make this mean something to you. Make this bigger than just money. Think of a goal that's bigger than yourself that you could strive for as a result of, you being able to trade. Whether that's to take care of your family, maybe it's to teach your kids or nephews or cousins or whatever. Maybe it's to help the homeless. Maybe it's to, do some other noble type thing that you're passionate about. Because it's easier to quit on yourself than it is to quit on things that you care about or something that can have a serious eternal impact that you want to be a part of. Okay, so again, it just depends. You gotta have these conversations with yourself. And then, of course, the technicals, obviously you keep showing up to something like this. Eventually it's going to rub off on you like it has with many, many students in the last 3 years, here and in my private community. So, keep your sphere of influence small, focus on what truly matters, be around people that know what truly matters. And, take bits and pieces that make sense to you, that resonate with you. Understand that there's non-negotiables like what I've just talked about in terms of liquidity mapping, basically throughout this whole call. You want to make sure you understand that process. Previous months highs and lows, weeks highs and lows, days highs and lows, session highs and lows, new day opening gap, new week opening gap, regular trading hours gaps for the lower time frames. You know, the stuff that I've talked about before too, internal to external range liquidity, changes in the state of delivery, balanced price ranges, right? All these different things, like they add so much value to you and have to do with certain ways that liquidity is engaged. Okay. But again, if you don't take anything away from this call, you have to take away the main point, which is you have to always, every single day, every single week, every single month, every session, be aware of previous month's highs and lows, previous week's highs and lows, previous day's highs and lows, previous session highs and lows. And then from what ICT has mentioned, is changing this. No, so it's going to be the other way around, Victor. Cooch or whatever the hell that is. It's a ripoff of ICT's concepts. So it's actually, the Cooch is a change in the state of delivery. I don't know that for sure, but if you're saying that, I've never really studied outside of ICT concepts, but I hate when people rename shit. It's totally disgusting. And maybe it's the same, maybe it's not. But if it is the same, then why not just study ICT concepts if that's where everything came from? I mean, most of these people rip things off, and most of the stuff is totally not at all effective the same way that the stuff is here. They'll spend a whole lot more on some other concepts that are made by some 20-year-old that has like maybe 2 years of experience, but is supposedly changing names. That can't prove it live, can't do nothing, but they will hesitate because the founder is a little bit boring. They'd rather hear the more entertaining aspect of things. What is the difference between changing the state of delivery and market structure shift? I mean, they're kind of interchangeable, I guess you could say. Actually, no, yeah, I'm going to go out on a limb and say that they are absolutely interchangeable ideas there. Okay. Market structure shifts and changing the state of delivery, they're kind of doing the same thing. Shift in market structure / changing the state of delivery. They're both changing direction. Okay. They're both cutting off, the opposing way. When it comes to market structure shifts and changes in the state of delivery, they could be classified in both directions. Like this here changed the state of delivery to go higher, but then again, it may look to change the state of delivery off this retracement to go lower, right? So yeah. Oh, Victor, I wasn't. Hopefully, you don't think I was attacking you. It just pisses me off because there's so many people lying and trying to create things that are retarded. And as a trader using ICT concepts for the last 6 years, I've seen so many people try to knock off his stuff, trying to, be something that they're not. Like nobody created anything. Just because someone renamed something that obviously has the fingerprints of the author on the back end, which is ICT, where is the integrity in that? If I was ICT, I would be suing everybody. Okay. I think he has sued a couple people. He's gotten YouTube channels taken down. He's went on attack, but there's just so many like people that lack integrity. And then mind you, it fools people. Would you rather learn from a guy that does it for 30 years, that has hundreds of thousands of profitable students who come out and prove it so you don't even have to think it's opinion? Or are you going to want to go follow somebody that supposedly is thinking like they created something that have like almost no students? Maybe a couple if their risk management is proper. But if they rip it off ICT concepts, the only way that stuff is even effective is because it's ICT concepts. So why not just learn from the source? Why not just learn from the source? I almost got pulled into that direction because some videos early on I thought were boring. But the more that I sat and listened, the more that I struggled as a trader, the more that I, gained experience, it started making me appreciate ICT a whole lot more, even though he's boring. You don't even have to watch any of the older stuff. Watch his 2016 stuff, 2022 stuff, and any of the stuff that he's done that is really, really current. He's kind of saved the rants for Twitter Spaces recently because, of people that don't like to sit through the rants. And of course, that's understandable. He's kind of did it on purpose. It's another thing that he admitted he did on purpose because, he wants to get the people that aren't serious the hell out of here. Okay. He's admitted that out of his own mouth. He's made things seem more complex than they really are because he said it out of his own mouth. Right? Example, Romeo's dumbass. Yeah. 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 Charlie, 1,000%. And then that scumbag tries to attack ICT. Like, bro, where does he intend? This is the one bad side of the trading industry, right? Like, there are so many disgusting pieces of shit like that have no integrity, that just want to look for the next big come up. And it's like, bro, like, you can't just take the blessing. I don't rename anything, but the luxury for those students that stick around and actually have an interest and want to learn ICT's concepts, you can see that he gives us so many tools so we can create our own system. He's even given us authority to say that this is my own system inspired by ICT. He even said that doesn't hurt him. He's like, I don't care. As long as you give me credit, I'm cool. You could do whatever you want, But people come out here trying to act like they're 25, maybe 30 years old, and they're out here saying like they created something. Bro, nobody on the internet that trades that's 20 years old or even 30 could have possibly created any of this. So for anyone to come out and do that, it's sick. I mean, look. There's another trader that I deeply respect. That's an ICT trader. His name is Doji, something. He's a young guy. Do you see him saying that his IFVG model is a reversal assassin, 100-point targeting system, like to change the freaking name? No. Does that hurt his business doing mentorship? No. So why is there so many scumbags feeling like it's such an ego? Like, these people have such big egos that they have to feel like they're the center of the attention. And it's unfortunate because those are really, really small people. Those people's ego is controlling their lives. Maybe it benefits them, maybe it doesn't, but deep down, eventually it's going to come back and bite them in the ass. Okay? Maybe it does, maybe it doesn't. Karma is kind of selective from what I could see. But, it's sickening, and anybody that I could get to see this as the reality that will then invest, like as a result of what I've said, invest in the actual concepts, whether it's with someone that teaches ICT concepts and has integrity, or just watches ICT concepts as a whole in itself, versus giving money to these fucking frauds, okay? These people that have no integrity, it makes things worth it for me to call this stuff out. If I can get people that are on the fence thinking that, maybe I should watch this guy over here, maybe he's more entertaining. If I can get them to be convinced to come to the real stuff, like, would you rather eat like artificial food or real food? Artificial food that's disguised as real food. Which one would you rather get? Maybe the real food's a little bit more difficult, right? But it's more healthy, right? And the fake stuff is, quicker and worse for you. Probably fuck you up in the future. Wouldn't you rather, if you knew the difference and knew the risks, wouldn't you rather get the actual shit? Right? Wouldn't you rather get the original versus the knockoff? A lot of the questions that people have too, this is a risk too, for those that go and watch these people that are doing these things that are just renamed ICT concepts. There's a lot of answers that you cannot get for particular things from these idiots that try to rename things. Okay? These people rename stuff and have all this shit to say, but if there's a specific question about the dynamics of a particular topic, they're nowhere to be found. Because they themselves don't understand this shit entirely. They've just rushed to go create a fucking system that doesn't even probably work. That's why they sell a course. I don't sell a course. I sell experience. Okay, when it comes to my stuff. JadeCap does the same thing. All these ICT traders that prove themselves, they sell experience. They're not just shoving a course down your throat kicking you on your way. No, we are intimately dealing with students to help them. And that's much more valuable and just as profitable, okay? Way more helpful than some idiot that's selling a course claiming that they know this or they know that. You know what I mean? It's just sickening, okay? And that's why I started being public, because I want to be the change that I want to see in the industry. I tell my students, I encourage you to start a YouTube channel. Start it before you're ready, okay? Show your progress. You know, if you want to have some type of, YouTube endeavor, if that's what you want to do, it's encouraged. We need people here that know what the fuck they're doing, that aren't going to be jackasses making ICT look bad, okay? We got to flood the zone with real traders that actually want to help people, that know what the fuck's going on, so these frauds stop making money, okay? Because I was hurt by a fraud, okay? And I'm sure a lot of you guys have been hurt by a fraud in one way or another at the start when you knew absolutely nothing and were wishing for somebody to come out with proper information that sincerely wanted to help us, okay? So do you know Day? He's also a scammer. Dub 90-minute cycles to quarters theory, and also talking down ties. Yeah, what a scumbag. What a fucking damn dude. I have respect for him too. Day, doesn't he have he has like a white logo on Twitter? Man, that is heartbreaking, dude. These people need to relax, bro. What is the commonality behind all these people? They all have a course to sell. So of course, what's the best way to get promotion? Let's attack ICT. You know, there's a squad of haters to ICT, which is very large. There's a squad of people that love ICT, that see the value, that don't have egos. It's like a constant battle between those two sides. And it's totally ridiculous. It really is. It's totally ridiculous. I just wish this industry had more integrity. That's why anytime anyone ever comes to my channel and they say anything about all these other things, like, dude, it's a ripoff. If it was up to me, I would tell you, erase every name that you've ever heard. There's enough to learn in ICT concepts. There's more. I'd go out on a limb and argue that there's more, 100% absolutely more detailed information that you could get from ICT concepts. And this is a very simple alternative. If you don't like ICT, right, go find someone that knows and is public that's willing to help you learn ICT concepts that you enjoy listening to. There's so many options, so many charter students like myself, so many people that are out here publicly providing information. I have another friend, if you guys, I love this trader too. He's an amazing charter brother. CJ Trades on YouTube. Amazing individual to go watch. I highly encourage you. If you'll like my stuff, you'll love his stuff as well. I have no problem with sharing people, right? Like, we are here to change lives. Everybody. CJ, Jade Cap, who else? I think Trader Kane. I think he also has a service. Amazing trader. Okay, he has some negative stuff to say about how boring ICT is, but hey, it is what it is. He doesn't talk shit about his stuff. Okay, he appreciates it because he's made millions of dollars off of it. Who else? Who else is a good Kit, right? Kit on Twitter. He's a good trader roundup. There's a beautiful community of people that are just amazing, and with the fact that there's so many amazing ICT traders that are now willing to share their time, why in God's name do people want to go to these frauds that have clearly a controversy around their concepts being ripped off ICT concepts? Would you want the fake Louis bag or the real Louis bag? If you had a choice and they were the same price, what would you choose? Most of us share stuff for free. Of course, if there's students that want a deeper experience, want more attachment, or not attachment, but more support, more active support, clearly that's offered. Because time is valuable. You know what I mean? And if people were out here just teaching 100,000 people on one-on-ones, they'd never have a life. So there has to be a barrier. And there's people that are scumbags that don't care. They just want to come in and rip shit off and take the information and say it was theirs. Even with us, that are just ICT students. They come in and try to steal shit. So of course there's going to be some type of wall in front of it. Of course. It's just, I mean, it just makes sense. You know, I would argue for me, like my wall is probably a lot lower than it probably should be. At least, you know, that's what my students say from the results I've seen. You know, maybe that's true, but it's never going to change. The paywall for me is going to stay the same. I'm always going to come out on YouTube until I'm done being public, which may happen in, you know, when I decide. That's well in the future. You know, I love doing this. I get to talk with amazing people like you guys. You get to share your experiences with me. You make me better as a mentor. You help me understand where a lot of new traders are at from many different walks of life, from many different perspectives. You know, and then I get to share some of my wisdom with you guys. And then you can pick and choose what works for you. And then you go out and thrive on your own. And then you just come here eventually to, you know, be part of the conversation, to just hang out, you know. But yeah, I'm happy that there's at least a good amount of people that are seeing the idiotic, egotistical, no integrity type of shit in a lot of these people that come out here and claim they're this or claim they're that and don't really do anything in terms of proving anything. You know, I'm glad that, you know, there's a lot of people that are aware. But yeah, kind of got off on like a super intense rant about all this nonsense. It's something I just can't stand. It makes me sick to my stomach because of the way ICT has helped me. You know, just to see how people treat him. He's kind of invited it. But then again, I mean, come on, bro. Like, are people that emotional? Are people really that self-centered and egotistical and just so much in a hurry to be the center of attention? Like, does it really matter? Like, you really got to be the center of attention? You can't just go trade and make money and shut the fuck up, or just be here and help, you know? It's just, I don't know. I'll never understand it. But I've seen a lot of people take it like this too. I've had over 183 students in the last 3 years come to me for help. At least 30-ish% of them came to me as a result of them failing with things like these other concepts, like the change of character, whatever type of trade, supply and demand and all this stuff. Like, majority of them that have come to me, 30% of them, not majority, 30% of them came as a result of them failing with that, right? And then started seeing like, oh, there's little similarities to this and that. And then they come to find out that, holy crap, it's like an entire ripoff. And these people don't know half the information that we do. And it's unfortunate, you know? So, again, like, it's just not worth it. Do you want the fake Louis bag or the real Louis bag, right? You got two choices. What do you want to do? The fake Louis bag is going to last you probably a very small amount of time. The real Louis bag, you know, could very well last you a lifetime and some. Okay, so you want the real ICT concepts or smart money, or you want the fake smart money ICT concepts, because that's interchangeable. Smart money concepts is ICT concepts. He created the term in like 1996 or something like that. Okay, so it's been, and his books are going to prove it, supposedly. He's coming out with books and is going to have pictures and different documents providing evidence as far as when he codified this stuff. So that's going to shut down everybody. You know, if not shut down people entirely, it's going to have some serious damage for the people that do buy the books. They're going to cut out in droves because, you know, people still doubt that he's the creator of this stuff, but he is. You know, as much as you want to hate it or not like it, you're going to have to swallow it and deal with it because that's the facts. It's the reality. You know, none of these people come out and do what he does. And, you know, I make the argument that nobody, right? Nobody, say it louder for people in the back, comes out and attacks this the way that we do. You know, even the way we do things here. Some of these people with massive followings, they can't do half the shit that we do live in front of people. You know? So Charlie said, hey, do you see people claiming they figured out? Yeah, yeah, isn't that hilarious? I mean, it's just the funniest shit, bro. And that's the thing. I learned like what was it? Maybe like 4 years ago. I learned very quickly that getting stuck on Twitter because of the controversy around ICT concepts. This is why I didn't know nothing about what Romeo has done and what Day has done. I know about some of their stuff that they've created, but I don't really know all like too much deep details. I just hear what some of my friends tell me about it because they're heavily in it. But I've realized even 4 years ago, it's very easy to get caught up in things in this industry because of the controversy, the controversial like environment ICT created. Just because he did that for marketing, he hasn't had to pay a dollar, which is effective, but it kind of just made a cesspool of a bunch of lunatics. Okay, a bunch of people that are just like they're in trading, trying to learn how to focus on trading, but they turn it into a soap opera. Like, dude, are you wanting to make money or are you trying to fucking be a glam queen and complain all the time and stir up the pot continuously like a drama infested lunatic? Okay. And most people on Twitter, unfortunately, or X, whatever you want to call it, are lunatics that hate ICT. The ones that hate ICT, they're pretty insane. And most of them haven't even watched a video. They just hear one thing from one person that hates ICT, and they think, "Oh, great. I guess I'll hate him too," because they don't know how to think independently. They let other people think for them. Like, "Oh, hey, you hate him? Yeah, I hate him too for fucking no reason," right? Like. Does that make any sense? Like, it don't make any sense, and it's unfortunate because it steers people away from his concepts. And then if they hear negative stuff, then they stumble across ICT. They have that negative view when they go into the stuff that he teaches, and then they hear something boring, and then they just quit. So it like takes away the experience from people, or the just the ability to actually sit and enjoy and learn what he's teaching. And you also have to realize as an ICT trader studying ICT's concepts, you have to be able to separate his persona from the teacher. Okay, like his social media persona that's a fucking lunatic, okay, that stirs up the pot to get attention, that is not the teacher. Okay, there's like two characters there. One's for marketing, one's for teaching. I mean, it's pretty genius if you ask me. He's even went out as far, last year and said, like all the mental health issues and these different things that he's supposedly said that he has. He even said on a Twitter space that was a lie, that he completely lied to make people get put in a corner who were trying to attack him and just kind of mess with them. I was like, what the fuck? That's kind of a weird, very odd statement, right? Like, it's kind of strange. But then again, if you think about it from a marketing perspective, he didn't want to spend any money. He didn't want to spend any money, and he knows what he has is amazing. So you can hate it or whatever, but just you're here to trade, right? Like, we're here to learn how to trade and be successful. Are we really concerned what he does with his personal life? Right? Like, he may talk about it, this and that, but just skip it. And if you don't want to deal with any of this chaotic stuff that used to be in this stuff, just watch the more recent stuff from 2022 on. A lot of that has like no rant. Most of the stuff is not 2 hours long. A lot of it is pretty quick. Then again, if you don't like his stuff, right, you could just get next to people like, me or CJ or anybody else that goes live that's willing to, give you their time for free. And then, sit with them and ask questions and learn that way. Either way, you have options. Okay, you don't have to just focus on him. Obviously, it's going to always, at least for me, be recommended that you watch his stuff so you can have a pretty strong baseline, and then I could be used as like a gluing component to make things stick together, and you could figure out what to focus on. Like today, we talked about liquidity mapping. We talked about many important things, as we always do, and just, how to calibrate yourself for the new week. It's a process that happens over and over. And it's just like a gluing effect when it comes to identifying bias and narrative. We talked about validation and validation. And, we go over many, many things every single week, and lots of people have been doing very, very well as a result of some of the things that we've been pointing out, like Tony and, Fritz is improving, and, many others that may not have been able to make it today. JD said, "I hope ICT brought hope to the hopeless in trading industry." Yeah, I'll tell you one thing. He brought hope to my life. That's for damn sure. He for sure did. I was hopeless, hating my life. Uh, During the time that I first started trading, I had a horrible relationship that was crumbling. I got fired from my job at the time. Then I had a baby on the way. It was COVID was happening, or COVID started happening right as I started learning, like me 6 months before. Um, so he put me into focus and made it so he made it so we can learn a skill that even if a pandemic happens, even if the world is on fire, and jobs get removed from AI and all these freaking things, he's given us a skill set that we could use and build wealth off of, as long as we're all able to still have access to the market. So again, for that, I'm eternally grateful. I could care less what he says, what he does for attention. I could care less what any of these dumbasses on social media want to say about him. Maybe eventually they'll start having shit to say about me. They can kiss my white ass, okay? Because I could care less. Seriously. But yeah, let me see. They watch 5-minute videos, Charlie said, where ICT is saying down close candle is order block. Then they tried without narrative. Very important what Charlie just said there. And the order block fails and they swear ICT is a scam. Yeah. Isn't that, what kind of thought process is that? Mind you, those same people, maybe, like you said, watched a 5-minute video, or maybe they didn't watch anything at all. They just heard Joe Schmo over here with his change of character or whatever the hell else they got going on. They got so many names for things. It's like the only one that I'm aware of. And then they say that, they're not going to watch ICT Concepts and he's a scammer. Yet they still fail with the other stuff and have questions that can't get answered because their mentor or the course that they bought doesn't say shit about anything. Can't be proven live, can't do this, can't do that. So, it's incredible. Mind you, I haven't even looked this up. Is there any of these people that trade? Do they call that change of character thing? Like, do they just call it smart money concepts, or is that supply and demand? See, I'm not even aware because I have never spent much time even digging into just the stuff. I just heard these terms thrown around. Is that under the umbrella of smart money concepts from the people that try to separate smart money concepts and ICT when he's the one that created the term? Like, is that under, like, what strategy is that under, right? Do they just umbrella term the smart money concept idea? Which again is, it's ironic that it was a term created by ICT, but they try to separate it. But yeah, is it like umbrellaed, the change of character or whatever the hell, supply and demand? Yeah, change of character, change in the state of delivery. It's pretty damn close if you ask me. That's a pretty obvious stolen term if you ask me. Is it not? Right? Supposedly the dynamics are very similar. But hey, and a lot of people don't even realize this stuff. Like a lot of people don't intentionally slip into these other things. But some do. And those same people end up quitting trading. Okay. Do any of these people that do this separate smart money concepts, like this whatever the hell they want to call it, do any of them stream live and trade live in front of people? I don't even know. I've never seen a person that trades these things go live and trade live. Have you guys seen anybody? Or is it, of course, just ICT Concepts that go live? Or the students from ICT go live? Have you guys seen anybody? I'm curious. Maybe I'm going to go look that shit up. Yeah, they separate. And they only show market replay. What a clown show. Oh man. Yeah, it's funny too because the people that have the that only show market replay and only show screenshots, never ever go live because they're terrified. Those same people are the ones that have the biggest mouths, talking the most shit for no reason, as if they have authority to say anything at all about anything. Yeah, it's wild. But yeah, guys, I don't want to bore y'all. Kind of, we kind of went off on a little rant, but I appreciate y'all engaging, giving me your thoughts and some of the things you've experienced with this craziness. But yeah, if you ever have anybody that you're friends with that does try to slide into this like knockoff type stuff, maybe bring them to our channel, because this is our channel, this is our community, right? This is our family, and maybe we can convince them that silence the idiots. Okay, so social media is social media. You can get caught up in a net of nonsense, and you don't want to get caught up into that when it comes to being a trader, because it's very, very, very dangerous. And it makes trading impossible. And we want it to be very clear. Like students like Tony, right? He'll tell you, bro, we are accurate and we are not overly complicated. And it is exactly pure ICT concepts. There's no change of character, this and that. It's the actual names. Change in the state of delivery. Many different critical elements in terms of process. And it's very self-explanatory. Do I look like I'm confusing? Like a confusing, complicated individual? I'm just a normal dude. Okay? Like my thought process is how can I simplify this but not take away from the actual important factors, And I feel for myself, I did pretty well, right? And I'm still doing pretty well, and now I prove it. But what did that translate into? That translated into me also being able to share that perspective. And I started helping one person, 2, 3, 10, 20, 30, all the way up now to 183 plus people. That's not even including some of the students that just follow me on YouTube and Instagram that have, also been able to knock down payouts like Tony, right? Tony in the chat here, he's also in my free Discord. You guys could go join that if you aren't part of that. But yeah, this is a confusion to clarity type of channel, right? I'm not here to overcomplicate. I'm not here to rename things. I'm not here to make you feel like I created something. The only thing that I created, which ICT gave us the ability to do, is my model, the way that I organize my model and structure my process. There's certain things that I use, some stuff that I don't use, right? There's some things that I like to teach, some things that I feel are just unnecessary. And the proof of this stuff being effective and also still allowing students to figure out their own way of doing things, the fruits of that is, shown by a lot of the students that have come to me that are making progress. Fritz said, your insights and approach to SMC helps others, including you, grasp these charts. I'm grateful, dude. I'm grateful. Yeah, you've been with me for a little while now, maybe a little bit over a month or two, and yeah, it's a lot of them. Wow, but none trade live. They leave before candles close or open towards the buy. Tony, I think it was you, bro. We were live the other day, and we were calling the market in the chop fest that we were dealing with. I think it was on Tuesday, and we knocked down like 1 or 2 trades that were solid. And you came in with a comment that was like, "Hey, everybody is blowing their accounts. Everybody is getting wrecked except us." I was like, "Dude, how do you know this?" And you were pointing out the different live streamers were just getting totally wrecked. And we just knocked down base hits and got out. As we're supposed to, bro. We're not here to blow accounts. And it is what it is. Dude, that had me so convinced that was the case that the next day on Wednesday, I went and looked at other people being live, and people were still getting wrecked. I was like, dude, like this is incredible. Like this is totally incredible. Oh man, these people got huge followings, so I feel so bad for the masses that are just handing the market money because these people are just totally ridiculous. And these people have no disclaimer, no nothing. They're over here claiming this and that about making real money and how they're going to get people rich. Like, bro, you know you could sue these people, right? Like if they have no disclaimer, you can go in there and sue them for false advertisement. You know, if they're saying, "Oh, I can for sure get you money. You're going to for sure be profitable." And if they say that type of stuff and they don't have a disclaimer, which is needed by law in the United States, you can be sued for everything you have because you're falsely saying you're going to get someone rich and giving people trade advice. You know, like these people need to be careful, bro, because one person's going to be pissed and is going to have hella money and is going to attack somebody. He said, thanks for the new business idea. Sheesh. Hey, it is what it is. Hey, ICT traders got to fight back somehow. Shit. These people want to keep knocking stuff off. People keep wanting to steal things, keep trying to claim they're this, claim they're that. All right, prove it to the court. Prove it to the court. I could bring my broker receipts. As far as I'll never sit here and promise people are going to be profitable because that's up to you. You know, that's why I have a disclaimer. You know, that's why I'm very, very heavy on risk. And I'm very, 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 very calculated as far as what I make y'all focus on. But man, these people, I don't know, bro. Keep that in mind, y'all. Someone wants to keep playing games. Someone hurts people or hurts someone you know. Yeah, I'm not, promoting anything, but hey. Need to get rich _ ICT said he's got a business idea, so I don't know. You do what you will, bro. Oh man. But all right, guys. So I hope you had fun today. Today was kind of a more lively, off topic in some cases type of weekly review. But I hope you guys got value from the analysis portion. I might have to put a chapter section for people that want to just see the analysis, but maybe they'll enjoy the entertainment here and the opinions that we've had, because I think all of the things we have talked about are valid, both for the industry and then of course for the technicals and stuff that we've done. But yeah, so any of you guys that are not in my free community, definitely go join the Discord. Would love to keep in contact with y'all. Would love to have y'all part of the family there. There's a lot of good people there. Of course, there's a lot of good people in my private community as well. Obviously, it's totally up to you if that's something you feel you would need. That's a next level of assistance and support. It's not going to be for everybody, right? Because some people either can't deal with it, or they, maybe they're able to achieve it just by being on YouTube, because I pump out a lot of stuff here. But again, there's different people, they have different mindsets, different struggles, and I like to keep that door open. Not sure how long I'm going to keep that door open, but for the meantime, there's no end to it, at least for now. So again, if you guys are new, if you guys need some assistance, maybe you don't like listening to ICT's videos all the time, because maybe some of the stuff seems too long or whatever, and you just want specific questions. I'll probably encourage you to still watch a couple of them that are important, but there's always that extra support that you can have. I know I wish I had that. I only had videos and people that were gracious enough to help me along the way. But yeah, that inspired me to do what I'm doing now. But with that being said, again, just to fly through this one more time. So I want to see if this fair value gap could hold, see if this could push price higher. If it breaks down below that, starts really attacking sell side here, it gets below this, I'm assuming it will tank. Otherwise, it's going to continue its march higher. We've got the wick midpoint in there, all the quadrants in there. So that will be of interest. And then the previous week's high here is going to be interesting for buys. And then this wick here, the middle portion, we're going to see if that's going to hold. I want to push price higher. We'll see what it wants to do going into the start of the week. There's, the news landscape, right? Sunday, no news. We don't trade anyway. Monday may have fireworks. Tuesday, it's going to be expected to be low probability. And then Wednesday, Thursday, Friday should be somewhat interesting depending on the response FOMC gives. I do think that there's going to be some fun stuff taking place this week. Hopefully, right? But regardless, even if we're in consolidation, we've navigated that type of delivery through the last couple of weeks, which I hope has been valuable for you guys to see, especially you guys in my private community and my Discord where I was sharing some stuff. Let me see. By tank, do you mean by it not respacing, consequent encroachment? By tanking, what? Okay. Well, if it tanks, I mean, it would drop, right? So if it drops, breaking through the consequent encroachment of this wick, and then also the fair value gap here, and then breaks through this wick, basically if it drops through that level and just starts really ramming through, then obviously that would change my assumption. Right now, it just seems like they came down, hit a failure swing, which also had SMT between the other two yield markets, and then now we displaced higher, a shifting market structure, and then it also came back down to the fair value gap, and now we've respected the midpoint. So none of this is indicative so far, at least for now, of price wanting to decline. This is all encouraging price to want to move higher. Okay, so we're going to want to see how price is going to behave within that, right? Whatever it does, it's going to have to first take out the weekly high and weekly low, or the previous week's high. We've already taken out the previous week's low, or previous 2 weeks ago, the low, and then it rallied up. So we're going to see if that's going to continue pushing higher. The only way that I start favoring shorts in this market is if it drops down through these levels, because that's 1, 2, 3 PD arrays, and then that would make me start to identify the order block here, the midpoint. Once it breaks through all of that, my attention goes 100% to these equal lows down here. But again, that's not what we're focused on just yet. Unless that takes place, we're going to continue wanting to seek price going higher, taking out this high, this high, this high, the wick quadrants here, and then the wick upper quadrants in here, and then eventually these highs up here. Okay, so yes, I hope that answered your question, and I hope that makes sense. Then again, the yields, like I mentioned, they're just going to basically do the opposite. If price breaks through this and stays, I mean, it kind of broke through here already, but if it stays below this fair value gap that overlapped this fair value gap, and if it could get down below this inversion fair value gap in here, uses it as resistance, then obviously we have very obvious lows down here to target. We have a wick in here we want to watch, right? Because you break that into quadrants, could act as different levels of support and resistance. If they start getting smashed through, again, that's just further confirming the price is definitely looking to want to seek sell side. We also have an SMT here. If you look at this, got SMT there, right? SMT. Oh, wait. Actually, yeah, so there's actually, disregard that. There's no SMT there. There is a fair value gap in here. But there, it's very similar delivery across the board, right? What I do see, we have this layered liquidity down here that's beautiful. So again, it looks very nice for price to want to continue dropping. If we look at this asset here, if that doesn't remain to be the case as far as it favoring sell side, it's going to have to stay above this fair value gap in here. Maybe this order block can also hold price and push it up as well. So far, again, there's nothing proving that that's what's going to happen. The only thing that's proving right now is the fact that it wants to go lower, and we're in a consolidation for the most part. So, we'll see how price wants to behave off of that. If we go to this weekly chart, we see an order block here, Got this down wick, right? Looks like a bearish breaker, right? So it's looking like it wants to continue to drop. Okay, I've had this breaker outline for a while, right? So the bonds look like they want to continue potentially dropping. That is not supportive of buy side in the indices, but then again, we've had this cracking correlation between the bonds and yields happening pretty much all throughout the start of the year. So we've been just having to go off of the near-term liquidity on a day-to-day basis and what the overall relationship is between the DXY and for the most part the indices, and somewhat in the currencies as well. But even there, between the indices and the foreign currencies, there's a cracking correlation. So again, it's just promoting the fact that we've been in a very high risk environment. What does that mean? Does that mean you get scared of trading? No. I've had 3 students just in this past month that have come to me for help, that have spent time here, that have passed funded accounts, that have got payouts in this environment with cracks and correlation, right? So the proof of concept, is very effective, right? It doesn't, like, if one thing is out of line, we just observe it, and then we just put it on the sideline for a bit. We keep our eyes on it just in case it confirms what the indices are going to do. But for the most part, we'll just go off of identifying technicals. Maybe the fundamentals will provide something else in terms of COT, seasonality and whatnot. But yeah, I'm gonna look at COT a little bit later, and I'm gonna post it in the free Discord and the paid private community. So we'll have that to go off of. We'll see if something helpful is going to be there. I'm not too sure. I haven't checked it since last month. So yeah, just part of the monthly review obviously has to do with fundamentals. We check in on everything, COT, seasonality, intermarket relationships, higher time frame wise, so on and so forth. But yeah. So again, in a nutshell, right? Trying to see this go higher, trying to see the bonds potentially go lower. We'll see, right? If it disrespects these levels that should continue to hold price going lower, then obviously, it'll start reaching higher, and we'll make an adjustment there. But for now, we're not going to make that assumption until something changes. For now, it seems like we're going to target the sell side here. So that is what we're going to stick to going into this week. Again, everything is always up for adjustment. Okay, we're never going to be perfect. I'll be the first one to come out here and say none of you or I will be perfect. We will make mistakes, but through those mistakes, we're still able to be profitable. Perfection doesn't exist here, okay, in trading at all, in anybody's arsenal. If it was, that person would be a multi-quadrillionaire, and they, would never need to even show their face anyway, So it just doesn't exist. So don't even expect it. We may get it wrong. Greatest thing is we have a process to make adjustments that give us a further confidence to take that opposing view if and when that opposing view comes to fruition. But for now, we're going to just continue to trust that this is going to go lower. We're going to continue to trust that this is going to go higher until proven otherwise. What proves it otherwise? 3 PD arrays getting violated to the downside for the yields. 3 PD arrays getting violated to the buy side for the bonds. Otherwise, it stays intact, aiming for these lows down here. And any lows on these upper time frames that are basically in the pathway towards these lows. Okay, so those are that's my opinion on this asset. Then, of course, we're looking for the currencies to possibly continue going higher. Maybe they'll retrace a little bit and then bounce. Again, if it starts just slamming through these levels, we'll be able to make adjustments around that time. But nothing here proves that long-term stuff has changed. Okay, so that's what we're going to stick to. All right. All right, Charlie, I appreciate you, brother. You have some work. All right, brother. I'll see you on the next call. But yeah, so again, currencies are potentially going to drop to go higher. Maybe they leave this low and create this SMT. We'll see. We're going to also watch how this order block holds. If the midpoint of this order block doesn't even get attempted again, and we just continue to be ramming lower, Maybe this fair value gap on the weekly gets traded through in the quadrants. Maybe they start acting as resistance instead of support to go higher. Then we'll use that, and 3 repeat arrays on that higher time frame to justify whether price is going to look to go higher or want to continue to go lower. For now, we're going to continue to support this going higher until proven otherwise. All right. And as far as the DXY is concerned, we're looking at this monthly or weekly fair value gap. We want to see how price behaves inside this liquidity pool in here. We'll see how price decides to deliver from this breaker, this huge monthly breaker I've talked about for the last couple of weeks. So we're inside this fair value gap. If it's going to hold and go lower, it should not have to come all the way up into these levels. It should be able to respect this, and not even attempt to get back up into this wick. It should just be able to march lower. We also have very obvious liquidity down there, quarterly fair value gap. We got this large wick, and then we have this previous week's low, and then we have the monthly low, and then the wick that's associated as well. Break that in the quadrants, and we have multiple targets to the downside. Okay, so again, that's my assumption. I'm going to want to see this respect, maybe try one more time to get up here, stop these people out, then possibly catch a displacement power 3 to the downside, targeting the lows and some of these levels I just mentioned. Okay. And then as far as the NASDAQ is concerned, I would like to see this high be my target for the week. Okay. Many new week opening gaps have been violated. This whole area in here created a balanced price range. You can see how that was respected. This gap in here, right, the middle portion of that was respected. Previous week's high here, taken. Never came back into that range. Why? Because this created a balanced price range, right? Like I was mentioning all throughout this price delivery, here and in the private community, especially, and in my my free Discord. So everybody was aware what my opinion was. All right, I was not ever saying let's short, guys. Let's look for sales. Not one time in this entire environment, aside from here, because we also took this trade too, that took out this low. I showed that in my private community. And then, of course, price came down, hit it, rallied. This is like I said, it's a yearly order block that sent this higher. And obviously the tariff situation shortly after that happened sent price higher. And now we've broken this high and this high. So that makes me confident that this now has turned into a bullish delivery. We've hit this daily fair value gap. Opposing PD array may act as a reversal point. It may reverse price for a little bit, come and swoop up some of this liquidity, position the losers on this side, maybe use this gap upper portion, maybe even the wick here, the midpoint. Use those levels, this fair value gap too. If you see the black lines, it's a fair value gap. Maybe it even uses the midpoint there. Lots of stuff overlaps at the mid portion of this gap here. This gap high, fair value gap midpoint, wick. Here we have a gap in there, and then we have Friday's low. So I wouldn't be surprised if this turns into a retracement, gets us down somewhere into here for bullish power 3, then shoots price higher, right? Targeting the buy side up here. Okay, and in order for this to fail, this balanced price range here needs to fail as well. So that means that I will only look to sell or be interested in shorts, like more long-term, like on a week-to-week basis. Again, if price comes through this low and starts violating multiple PD arrays to the downside. Okay, preferably, we have this order block. We have another down candle in here. I'd prefer to see maybe even as far as this gap here, this volume imbalance, and the mid portion of this order block getting violated again before I am confident the price is then going to want to reach down even further and attack this low. Right? If none of that happens, we're going to continue pushing higher. All right? So was that quick overview of all the stuff that we've talked about today? Was that clear enough? Did that make sense to you guys before we put a ribbon on this and go enjoy our Sunday? Let me know in the chat if everything made sense so far. 100% clear. I love that. Fritz, you're freaking amazing, brother. amazing. Super glad to hear that. All right, how about everybody else? Did everything make sense? Oh wow, I just looked at the like count on the video. You guys went and liked the video. Thank you so much for the support. Greatly appreciate it. Again, it just helps the channel out. Helps me help other people because YouTube will push the dang videos out because the algorithm gods are a little chaotic in this very saturated environment we call trading. Bunch of people jockeying for attention. And I don't do anything like that. I just sit here and state the facts, come in, kill the market, leave, teach and leave. Don't really stir up the pot. Maybe I should stir up the pot, right? Maybe I should come out here and start calling these people a bunch of losers, right? Maybe I should do that. I probably won't. Maybe. Possibly. No, I won't. Maybe. We'll see. But yeah. So again, if any of you guys got questions throughout the day, throughout the week, you guys can always catch me in the free Discord. Again, I just want to throw it out there one more time. I do have a private community for those of you that do want that more intimate experience. That's always available. It'll be for you, some of you guys it won't be for. But nonetheless, I'm grateful for you guys, your guys' support. I will always be here to help and support you guys. In all communities, because regardless, you guys are here supporting me on the channel. You're spending your weekend with me right now for 2.5 hours, a little bit over. So I greatly appreciate your time. I hope you guys have fun. Got some value from today. Definitely keep up, like I said, in the Discord. Don't forget to share the video with anybody that you think can get value from this content or can maybe add to the conversation. It's always good to have good people around and those that are willing to learn or add value, right? It makes the community better and stronger and more valuable to those that show up, right? Yeah, no worries, Fritz. But all right, you guys, with that being said, I will catch y'all on Tuesday in my free Discord. And yeah, until then, guys, you have a wonderful rest of your weekend, and I will catch y'all on the next one.